All right, Mike, you need no introduction at this point. You're the OG uranium bull. Legend has it you were investing in uranium before we split the atom, and that in combination with the obscene oversupply in the interview market makes it challenging for me to deliver a good interview because you've been asked most things regarding the uranium bull thesis at least 92 times already. So in an effort to make this conversation somewhat different, I want to talk about shorting uranium and maybe shorting in general. So maybe so that we can actually start off by talking about your past, which is luckily interesting enough that we could probably spend hours talking only about that. But so you were, as far as I understand, you were a short seller at a hedge fund before you
hmm
you went off to do your own thing, and those guys don't typically have the best reputation among retail. So let's first talk about that. What's that like? Did you ever participate in Soros's master plan to take over the world by shorting exploration
yeah,
companies? And what?
it's funny. I often I did. I started my career in the mid '90s as a short seller. I was at a hedge fund, and we were doing work looking at all different industries. And I'm always amazed to see what people think short sellers are. They think they're these guys with you know going around doing bad things to companies and that was always when I learned that over the years. I thought, wait, no, that we're looking for companies doing bad things to people. We're looking for companies that are there's the general short where a company, you might have a disagreement with the consensus numbers as to whether or not it's worth owning. You might think margins might be under pressure, pricing might be under pressure, and that's healthy. That's right. It's all healthy. It's what takes the other side of the market, right? It takes buyers and sellers, and if the shorts are wrong, they have to go cover their shares, which puts rising pressure on the prices. But most of what you're doing is looking for companies where you disagree with what the general consensus is, and because short selling, your risk is unlimited, right? The price can keep going up, and if you own a stock at $10, your downside is zero, right? If you're short a stock at $10, your downside is unlimited. It can keep going up, and so with that, you learn over time if you want to be successful at it. And I was part of a long short fund, and I cut my teeth on the short side, and I did that for many years. But you learn that you're trying to figure out a company's outlook versus the consensus expectations. And consensus is basically there's sell side consensus and buy side, but most of it is formed by the sell side, right? The sell side is the science. They're putting the numbers out there that it's the bar. And sometimes they're low bars, sometimes medium height, sometimes high bars. But what are the revenue expectations for a quarter or for a year? What are the gross margin expectations, the operating profit margin expectations, earnings expectations? What is the expectations for net leverage, leverage from a balance sheet perspective, all sorts of stuff that you've got to concern yourself with. And you don't just go short a stock because you don't like the suit a CEO is wearing. There's something that triggers you to look at it. It could be your view on something macro with the macro economy in which this industry participates, where you think there's going to be pricing pressure or cost pressure, whatever it might be, and you look at the numbers and you model it out yourself and you have a disagreement. Or you could think there's something structurally wrong with an industry, that you think there's something happening and the market hasn't picked up on it. But you're using the sell side, the investment bank research, as a guide, right? They form the consensus, whether it's one, two, three, five, 10, 20 analysts. And more often than not, right, it goes back to understanding what Munger would always say: no market structure, right? Market structure. So this market structure, what is this? What are you doing? What's the act of doing it? You're looking to understand what is how's the sausage made, right? And so how is consensus formed on the sell side, right? There are barriers that are put up between banking and research, but at the end of the day, a guy who's writing, or a woman who's writing research that they're sending out to their clients, you do see some that tell you to sell a stock, some that tell you to hold a stock, but the vast majority are buy the stock. And
Yeah.
why? Because they're aware that if they're an investment bank, right, a good chunk of their business comes from generating banking fees, right? So if you're a banker, you're dealing with a company, and that company is raising debt, they're raising equity, they may be doing M&A, and your bankers are in there trying to sell them those services. And if you have, and if your analysts are out there writing negative research reports on them, it makes it harder for them. Now, again, there are barriers that are set up. They can't talk to each other in the banks, but these people aren't stupid. They know how the banks make their money. And so there's 25 years ago, there weren't those barriers, but now there is, and there's this pressure, obviously, on some some of the banks where the analyst feels that pressure, and they themselves want to speak to the management teams, and they want to be able to get access to them, and they might not get the access if they're really negative. Now, it doesn't mean they don't. Again, it doesn't mean there are not some cells. It doesn't mean you don't see downgrades. It does happen. A lot of the times it happens after the fact, though, right? It because there's comfort in crowds. So if a company misses earnings, a company has something structurally wrong, all of a sudden you see the downgrades come.
Mm.
And well, it's easy because everyone's downgrading it. But it's who's that analyst or two or three that are come out and make that call before the consensus sees it, right? And how do you do that? Well, so how do times if you're a sell side analyst, smart people, great educations, typically really thoughtful, but they have clients. Their job, a lot of their time is spent on the phone talking to clients, hedge funds, mutual funds, pension plans, sharing their investment ideas, educating them on their view of the industry. You're a sell side analyst, you're talking to a generalist investor that runs a fund, and they cover everything. And they're calling you to get up to speed on that industry. So you're spending their time doing that. Your salespeople are setting up calls to to market you so that they'll get they'll hopefully get commissions when trades are being done, and they're marketing you. You're spending time, so you spend a tremendous amount of time not doing research in the field. So you often get a lot of your information from the management teams. And the management teams are giving you the same information. They're giving broad guidance, right? Because they can't, because of Reg FD in the US, they can't go outside of that. But but again, you're taking that, oh, okay, management guided revenue here, they guided earnings here, they guided gross profit there, and so on and so forth. That goes into your model, right? So it becomes you become kind of a cog in a machine. It becomes kind of just mundane, and it becomes kind of apathetic. There's lethargy in the analysis because again, you're really not you're kind of finding that comfort where everyone else is. And if they miss the numbers, oh well, they missed it. We downgrade it. So what are you doing as a short seller, right? As a short seller, you're trying to understand how that sausage is made, understand how the company's arriving at their numbers, and understanding how the analysts are arriving at their numbers. There's that part of the story. And then there's the whole other part, which is based upon your own research. And so, right, because when your risk is unlimited, you need to go out and do your own research. Now, it could be a consumer products company, right? And okay, it could be a spirits company. And if you're looking at spirits, it's, what is revenue? It's price, volume, and the mix. What percentage of the high product, premium, low grade, middle tier, right? Price, volume, mix. What goes into cost of goods sold, right?
Mhm.
It's cost to make it. It's what's going on with labor, what's going on with the raw materials going into it. You're tracking all of this. You're going out and you're talking to the distributors. You're going out and talking to the salespeople at the distributors.
Not
You're talking,
sampling the product, I hope.
yeah, you're out sampling the product, but you're in the field talking to them, right? And so now you're seeing, and oftentimes the management teams of these companies are often the last to know what's happening, right?
Hmm.
They're not out in the field. Also, you should know when you're talking to, and I understand not every listener is going to get access to a CFO and a CEO. I understand that, right? But from an institutional standpoint, to the extent that you could permeate the organization to understand how's this business run, is the CEO, is the C-suite, is the CEO and the CFO, are they rather hands off? Do they give you guys capital and ladies capital to go run your businesses? And are you encouraged to make mistakes? And if so, what happens? Are you fired? Are people, you get back on the horse and you go again? Is everyone afraid to filter the information up to the top? Because we've seen that, I've seen that so many times over the years. It's run with an iron grip. The CEO has a huge ego. The CFO is afraid to talk to him, and all of a sudden, um, the bad news that's going on in the field doesn't really make its way up to the top until it's too late. And why? Because everyone's afraid of their job. And so it's good to understand what's the culture of the organization like. So those are all things that have to go. because if it's one of those cultures and you're out in the field, you're often going to find out what's going on before the people in the team at the senior levels are going to find out. Um, why? Because you're going out to your quarterly estimate. You're going out to your sales team in the field. Well, what is your pipeline look like? Oh shoot, I better say I have a really good pipeline of sales coming, right? Because I don't want to get hammered. And then that gets filtered up, right? There's all different ways to do it, but you have to understand each organization, each industry. What are the norms? In my case, when I started out early on in the industry, in my career, way back, almost 30 years now, my first couple of years were spent in the for-profit education industry, and that's an industry where um, they provide non-traditional post-secondary education, university education,
Mm.
trade school education, and the thought was not everyone had can get into regular universities for myriad reasons, and they were going to provide an opportunity outside the traditional means, and often going back to the 70s and 60s and 70s and 80s, you would see some of these were really good. They would teach you how to be a technician, they teach you how to do electronics, plumbing, the trades, which are fabulous because they provide real education. And then somewhere along the way, it started morphing into more general education, broader education, competing with traditional universities. And now this is really before the internet was just taking off. Before it became like what it is today, you had these were marketing machines. They had call centers, and
Mm.
they had often, and what they did is in the United States, you had Title IV, which is the funding available to students. And you can have it in the form of grants, which you qualify for and they give you money, or student loans. And Title IV, they kept increasing the amount of money available for students post-secondary education. And as you would see Title IV monies increase, all of a sudden you start to see tuitions increase because schools were like, hey, look at this. If they're offering more money to kids, if the government is guaranteeing student loans or they're giving more grants, let's just go match that. And you started to see this big inflation and it became a big business. And all of a sudden, entrepreneurs out there said, oh, look at this. We could go raise some capital, go public, and take that public money and then take this big and put huge marketing budgets and go and recruit students to come to schools. And oftentimes, um, what we found and the way we found it was there was a company, I won't mention the company, but there was a company that we didn't, the cash flows and the net income weren't squaring with us. The numbers didn't look right. And so there was enough, it drew enough of our suspicion to where we started to say, okay, well, let's go out into the field. And it was an East Coast, southern exposure for the most part, and some Midwest. And I would get on a plane. I would take a gym bag, a duffel bag with old jeans, a flannel shirt, uh, work boots, and I would fly to this. I would rent a car, and I would go to a paint store or a hardware store, and I'd get some paint, and I'd throw it on my hands, and I would put a little bit on my face, and I would go out and go to the parking lot, and in whatever city I was in, and I would just ask, what's going on. Can I learn for the schools? Before I would do that, I would talk to students in the parking lot, and I would say, "Hey, I'm an investor. I'm trying to learn. I'm trying to understand what's going on." And what started us going into the schools was when you talk to students in the parking lot, "Hi, I'm an investor. I'm trying to understand the business." They would say, "Don't go here. This is terrible. You should not invest in this." They didn't really understand the whole investment thing, but we signed up. We're not getting the equipment in the classes that we thought. Students are dropping out, and then from that, you say, "Oh, any professors that you should talk to this professor. You should talk to that person." You start putting a number of people together that you start talking to, and then I would go and I would go into the class. I would go into the school and put a little paint on. I wanted to look as though I was somebody that they targeted a lot of construction folks, and I would say, "Okay, hey, I'm here. Can I speak to an enrollment person? And I just want to learn. I'm thinking about doing this. Can you teach me?" And what I would learn was unbelievable. It was they would promise me and it was school after school after school. Yes, you would get this amount of your chances of getting a job were in the high 90%. You would get very high paying jobs. The job placement was phenomenal. The training you would get was phenomenal. Um, uh, they happen to have a program where you could start right away, and it was all of this stuff, and it was just the ick factor, the gross factor, the lying factor was really high, and you do that time after time, city after city, go in, talk to you just hang outside, talk to people, you go in and throw on some work clothes afterwards and go talk to, and you start to put all the information together. And then what we started to learn was that the quality of education was not there. The payback was not there. A lot of people were withdrawing. They were going to withdraw, but they were not. Their slips weren't being processed. So a student would enroll, they would not want to continue going because they didn't like the education. They would go down to the office and withdraw their enrollment, but the school wouldn't process it, so they were still on the hook for these student loans. And so over time, that became really onerous. It could ruin people's lives. And so you start to put a mosaic of information together in different states and different people. Yet during this time, we're watching the company report numbers and post really big earnings growth beats. And Wall Street was getting really excited. The sell side is raising the numbers, and you're seeing it really increase. And the stock's going like this. It's going really high. And as a young analyst, I was not the portfolio manager, but I'm watching, I'm doing the research in the field, and I'm just reporting back what I'm finding. And what you're reading out of the sell side was quality of education is fantastic, providing affordable opportunities for students. They're able to get great jobs with great placement rates with really high incomes. And none of that was true, according, right? And then you talk to former professors, former people in the business office, and they would say it's BS, man, it's nonsense. And so, but now as an investor, you're as a short, you're shorting it. You're faced with, well, how big do I want to get? What percentage of the portfolio? Again, at the time, that wasn't my role, but is it a 1% position, 3% position? And when's the catalyst going to come? Right? It's hard to find catalysts, but what causes anyone to even care about this? Because if they're beating and raising numbers every quarter, the stock's going to keep going up. And so you need to start to. It teaches you the art of investing, right? It doesn't matter what I necessarily know. It matters in the totality what's happening. And we'll tie this all back to uranium because I'm sure that's where you want to go with it. But it matters with understanding um, the role of the company in the bigger picture and how the expectations are being formed. And I would go and have lunch with some of the big bulls, the people who owned it, and they would tell me all of these great statistics they were regurgitating from management and the sell side analysts, and I knew that they were wrong. I knew they were wrong, but that doesn't matter as long as they're beating and raising. And so, we then started taking our information and started sharing it with people throughout different states and federal government. That we thought, here's all the information and contacts that we've learned, here it is. You figure out what to do with it. Well, fast forward, sometime within that 2-year period, the FBI raided, the company, and the company went to zero eventually, and for all the reasons that we saw. But it was a long time period, and so it was a great trial by baptism by fire for me as a young analyst, seeing how it worked. How is the portfolio manager thinking about this? How is it possible the stock keeps going higher and higher and higher, even though we know this is BS? That's what happens though. And so it was but it taught me, never to underestimate. And I was told this by one of the, I worked for, I happen to work for one of the really truly great PMs, portfolio managers, is never underestimate the laziness of a professional investor. Um, don't assume that they've done more than you, certainly, and don't assume that they've done more than just take the consensus work. Not everyone, but don't assume that they're out there going out in parking lots, talking to students, introducing yourself as a potential investor. What do you think? Um, because they're not.
Mm.
And so that for me, for years, um, informed how I thought about it for the next several years. I did that in myriad different industries: consumer, resources, um, industrials, healthcare, you name it. Looked at all different industries, but really all the same methodology and way of going about it, right? Playbook, if you will.
Mm.
What's consensus think? What do I think based on my own field research? Then in helping that put the models together, the model together, and understand the numbers. And again, and then trying to figure out how to marry that with what other people's expectations are. And so um, I don't know. Again, it's a healthy, different view of the world, right? Because if everyone just believed what everyone was saying, the stocks would always go down. And then when something happened, you got your shorts in there that are covering, right? They're buying the stock. And then, there are people, just like there are bulls who are over promotional and promising the world. There are shorts that are out there, I'm sure, being too promotional and starting stuff. But my experience was not that. I didn't see that. And so, and there's thousands of guys like that, like me. I'm nothing special, that work at funds that have a variant view, a variant perception, and they express it through short selling. But as time morphed on, and many years as I've been in the industry a very long time, you you do more long investing, but it's still the same approach. It's identical, right? You're doing your own work, understanding what's going on in the field, and understanding where consensus is. Nothing's changed there. And again, a lot of times the work is just being mimicked, right? A sell side analyst is putting out work, the buy side has it. And then, one of the things you learn over the years, you go to idea dinners. An investment bank might have a dinner. They're going to invite 10, 15, 20 investors of their clients down. Hey, come on, have a dinner and share what it's interesting to you. Share your thought. And then you go to an idea dinner, and a guy or a gal or a woman pitch an idea, and then that eager analyst that's at that idea dinner goes back and does a little bit of work on it, and you think so. And everyone's always under pressure to come up with ideas for your portfolio manager. And now you've heard a really good idea, you come back and then you do a little bit of work, you call a sell side analyst, you get smart, and then you go pitch it to your PM. And then 15 people at that idea dinner might have done that, but they didn't do the work on it, right? They didn't do the work that somebody might have done on it. And it's like a game of telephone. By the time it gets, if you said a message, you get 20 people down, the message is completely different. Well, what winds up happening in investing is there's a lot of groupthink on the buy side, and that groupthink winds up when things start, if everything's going up, nobody cares. But when things hit the skids a little bit or there's a problem, it's run for the exits because you didn't do the work on it. You don't have the conviction level in it. The person that did the work on it has the conviction level. So you want to be the person who has the conviction level, not getting the story rehashed and rehashed and rehashed, which is often what happens. And so understanding how the sausage is made is really important. And that was the same approach, that I took for uranium, and I'm happy to go where you want to go with that.
It's funny. No, it's actually sad listening to describe sell side analysis because in the uranium space specifically, it's exactly that, right? It's regurgitated desktop research that you might find on a company's presentation. Typically, nothing more beyond that, just written nicely, made to look very professional. These things to someone who's just getting in can look intimidating. They're like, oh, this is a professional research report. There's all these charts and sensitivity analyses and whatnot. And I see it disseminated sometimes by some of the bigger accounts on Twitter, even, and so on and so forth. But so that's definitely evident still to this day, and arguably it's getting worse. Partly because I don't know if analysis sells. I mean, I was reading a book. This makes me look smarter than I really am, but there's a book called Lost on Bay Street. Bay Street is where the financial center of Toronto is. And it was a guy, a geologist who used to work as an analyst for the big banks in the 70s and the 80s. And there was actual research going on in those days on the sell side. But then he goes into the book was written in 2008 or something along those lines. Again, Lost on Bay Street. Alex Dooley wrote it. And
Okay.
so he was talking about how over time the research departments got smaller and smaller and smaller and smaller. And eventually there was one guy who had to write like 20 research reports, which is impossible if you're doing good research, right? But
Yeah.
research stopped selling. Research doesn't sell anymore, so there's no more attention to it. Um, so that's something that I've
No, it is it's hard. They have a sell side. They're very capable. They're very smart. They have a hard job. They have to serve different end customers, right? Their own management who is focused on generating fees, right? Commissions, but
yeah.
also the banks getting fees. They have the management teams of companies. They have clients who both are long or short. So they're getting hammered throughout the day. They might have a strong buy on something and they're getting 3 or 4 phone calls from the short saying, "Are you out of your mind? Here's the work. Do the work," right? So they're under pressure. It's a hard job. Um, and then you take an industry as obscure and opaque as uranium. It went through a really difficult period, as most people know who are listening. For it was a decade-long bear market, and most analysts who were uranium analysts lost their jobs. A few stuck around, but many morphed into other. They may have become a base metals analyst or a precious metals analyst. And when I started looking at uranium, it was a 1 to 2, 1.5, 2 year project to model out supply and demand and learn about enrichment math and the tails that go into enrichment and how to think about enrichment capacity and how that impacts the actual demand number and keeping track of the mines under development, the brownfield, the the mines, the cost curve that's ever evolving, understanding how many reactors are on the grid. Yeah, you can go to WNA and they give you a number, but what is each of the 30 countries' attitude towards it? Is it increasing, decreasing? Which reactors will get license extensions? Which ones are going to close? It's a lot. And if you're tasked, if you're an analyst on the sell side doing that, it's in an industry, if you've kept your job, it's an industry where you're not getting a lot of support. You don't have junior analysts helping you do this for the most part.
Mm.
So you just don't have the time to do it. And as a result, what you see a lot of in the energy space, you see a lot of people relying upon various agencies, the IEA, the EIA, various industry consultants, and the uranium sector happens to have their own industry consultants. And again, it's where everyone then automatically refers to the consultants as experts. Just because you know a subject matter doesn't mean you're an expert at forecasting it. Um, you might know the nuances of it, but I've seen that across myriad commodities. You might understand how the commodity functions, but it doesn't mean you got the math right on the supply demand work because there's things that go into it. And there's a very big difference. But what winds up happening is, you're covering an industry, you're happy to have your job because your industry is out of favor. Uh, or you're covering now you're a base metals or precious metals analyst, but your research director still wants you to write some research on it. Well, you don't have the time. So what do? You defer to the industry consultants, forecasters, and that's having a lot of years of experience looking at that stuff, looking at sell side. Again, I don't believe anyone's numbers until I do them myself, and so it was on that journey of taking the view of being a short seller. Like, how do I apply it? And I came at this originally, Antonio, as I didn't know uranium. I looked at it in '07 and 2011. We looked at it very briefly, and I missed it both times. On the peak in '07, I talked to the guy, to my team that was with me, and I said, let's take a look at it. And came back and said, we've got so many other things going on. This is so opaque, it's complicated. Who knows if it's a peak or not? Move on. Okay. 2011, after Fukushima, you start seeing it get hammered. 2012, let's do the same thing. That's really complicated. Let's take a look. And that happens. There's just industries, you got other stuff going on, right? These are living, breathing things you do every day. And sometimes you're just jammed. But then when I had time to really spend time to look at it, that's when I started to do that. And it was the same approach. It's okay, this is what consensus says. Oh my God, consensus is dated. It's really dated. And where are they getting their work from? Oh, from an industry consultant. Okay, got it. Now I have it. Now let me go build it from the bottom up and let me really understand. And what you realize is, and I'm as susceptible as anyone. And as the uranium cycle has gone on, I too have to check myself every day to make sure I'm not getting lackadaisical, or the guys who work for me are not getting lackadaisical, right? Because things change. You always have to be aware. But but the in an industry that's left for dead, where you have you know just maybe one or two even paying attention to it, and then a few on a periphery paying attention to it, it then gets left to its own devices, and the numbers come from industry forecasters, and like I laid my own out and then started looking at the forecast and said, ah, come on, and I'm not going to get into it. I've beaten them up enough. Like wow, there's a recency bias here that's so crazy. And again, recency biases are things we are all susceptible to. It's been this way for 7 years, 8 years. It's going to stay this way. Nothing's going to change, right? And it's a real risk you run. I run it every day. I run the risk every day that I have recency bias in uranium because I'm long uranium. So I have to prove to myself, and we every day ask ourselves where we're wrong, um, to understand that we're not just being lulled into our belief. And with these, uh, if you're looking at government agencies that are putting out numbers, or the IEA, well, I don't even know the last time the IEA got anything right, or it's like, and in the uranium space, again, I'm not going to beat it up, but they're the reason we started our fund, because we looked at what the consensus numbers were. Consensus was formed by forecasters, industry forecasters, and by my math, it just wasn't even close. It was wrong, and more importantly, um, it wasn't wrong today, or that day, or the next day. It was wrong based on taking an approach that said, "Oh wow, look at that! Almost all companies that need to make a profit, which is more than half the market, can't." Well, what does that mean? It's I am not blessed with an abundance of intelligence. I have a modicum of common sense. That's it. But that modicum of common sense was enough for me to step back and say, huh, if half the market can't make money, how are they going to stay in business?
Mm.
Or what's their choice? Oh, they have to shut the mines, right? I don't go beyond economics 101. Economics 102 would be too complicated for me. But in economics 101, it's simply, if there's too much of something, right? Prices go down, too little, they go up. And right, what's secure for low prices? Low prices.
Mm.
So it was that basic stuff. But it was the it's coming from the understanding, though, is I just don't believe someone else's narrative. And it's not that I think they're dumb. It's not that I think there are reasons why people might not have the right math. And again, I'm always susceptible to that as well. So, and short selling taught me that. Um, there could be someone who started their career as a deep value long investor who never shorted a stock, that can come and you could have this conversation and they're telling you the exact same thing. It's
Mm.
just, for me, I learned that through short selling, and being on, when there's so much risk. If you're wrong, the prices can keep going higher, and there's no boundary to that. So you just tend to, you wake up in the middle of the night saying, oh shit, and that's why you keep a notepad on the side of the bed. I hadn't thought of that. I need to think of this. I need to think of that, because you're always paranoid that you're missing something. And it's that paranoia that I think drives you to peel the, at least it does for me, to peel the onion back. And I think about that every day with uranium.
Mm. I don't like you stealing my jokes on economics 101 and 102, Mike. That's my thing to say, but I'll let it slide this time. There's something else you mentioned in there that I got stuck up on. Is shorting. Sometimes look for broad themes to short. Like maybe you find one thing, they say, oh, there's something wrong with this company. Oh no, wait, there's something wrong with this whole industry. What would it take for you to turn short on uranium? Like what would that one thing be where you say, okay, that's it. I'm going to short everyone, the whole sector?
Yeah, it's a great question. Um, and I look for it all the time. And there are companies. So I have the ability to short. I don't. Um,
You don't short any uranium companies right now?
no.
Okay. Not even as a
One
hedge
of
or something? Because I know you're technically long and short right now. I mean, the fund, right?
in theory, I could.
Yeah. Okay.
I can't talk in terms of fund that type of stuff. Just
Okay.
we're registered. I can't say you did
Sure.
talk about, but what I can say is what you find in periods when things are really uh, in a bullish setup, if you will, a bullish tone, and there's reasons for things to go higher. Oftentimes, the crappiest companies will rip the most, right? Because people say, "Oh, they have the most leverage to it," and animal spirits take over, and the really crappy ones are the ones that I would be more inclined to short. So, just out of self-preservation, I know that not to. I think cash at times is a nice hedge. Um, in at is another way to hedge a portfolio is with cash. If you're not if you think and again you ask what it would take to short. It's also it's a continuum, right? My interest in uranium was at $18, $20, $21. Here we are today at 85, 86. The term price is 79, which I think is is ridiculously reported because that's a fixed base escalated price versus the market related pricing, which is floors and ceilings, which are much higher now, but without getting into that. Um, but there are periods where nothing goes straight up, right? Nothing goes what's the term somebody told me? It's a when moon. When does it rip to the sky? I don't know.
Sure.
Things it ebbs and flows, especially over many years throughout a cycle. You have periods where things are ebbing and flowing, and especially in like uranium, where the reported price daily is the spot price, and the spot price, as you know, is a much smaller, significantly smaller portion of the overall market, and contracting is where the value is created. But many people don't have an interest in waiting for that, and so they stare at what's spot prices reported daily at the end of the day, which is oftentimes just the midpoint of a bid and an ask moving around with no trades because it's so thin the market versus the contract price, which is reported once a month. So where do you think people are going to gravitate towards? The blinking light of once a day. And so they're staring at things that are not critical to the market. But so there are times where there's more uranium in the market near term, just a drop. And we were talking about in the spot market, which is a very insignificant amount of pounds versus the overall market. Sometimes there's a little bit more that's available, a few 100,000 pounds. We're talking literally nothing, but enough to move the price some dollars here or there. There are times where um, there are holdups. Section 232, going back a few years, when a couple of the uranium companies wanted to restrict the amount of uranium that could come in. It caused a delay of, I don't know, 12, 18 months of contracting because it created uncertainty in the market. The Russian ban now creates uncertainty. Well, what are the guidelines going to look like? Uncertainty in an equity market. In an equity market, uncertainty, people don't like uncertainty. They like more certainty. Same thing when you're a buyer of nuclear fuel. I don't know what the guidelines. Am I going to get a waiver? Am I not? What's it look like? I need for it to all pan out. People step back. And so there are times like that where, you can recognize you have to understand the art. What drove the uranium prices up, the equities in March and April? Well, you saw a lot of talk about data centers and AI, and everyone's getting excited, right? Oh, right. And so who's the person that's buying that, right? It's a typically, I don't know, certainly retail, but there's a lot of institutional investors, and I sit in a seat where I would have access to institutional investors who are going to reach out to me because we've been around the trade a long time, and they love it. Oh my God, data centers. Like when Wall Street's packaging themes, always be leery of themes. It's the bricks, it's the this, it's the that. They think in themes, and people jump on themes, and they love themes, and and so when you see hysteria taking place, oh my God, AI's data center, nuclear. You see a deal signed with Susquehanna Power Plant by Amazon. Absolutely, it all matters. It's all going to increase the amount of uranium over time. Over time, it's not going to. influence the spot price of uranium today, tomorrow, or next week. It's just not. That's not how the market's structured. That's not how nuclear fuel buyers think. So now you've got people rushing into certain stocks and they're taking it higher. And then all of a sudden, you've got the ebbs and flows of the market. Sometimes there's a little bit more in spot, and there's not enough buyers in there. But again, in the spot market, it's a very small portion. It doesn't drive supply demand of the contracting cycle. But but you've got people staring at this when this matters. They're staring at this thing, and they just came into the market. They bought it up because of the AI theme, and spot's going to go up or down $4 or $5. And when it goes down $5, they're like, "Oh my God, what happened to the thesis? Oh my God, I thought it was AI." Okay, if AI and data centers never existed, it doesn't matter because the amount of uranium needed in nuclear fuel in nuclear reactors, the shortage is massive. This just is a little cherry on top, but it becomes the focal point. It becomes the talking point. It becomes the data point that people focus on, and it's misdirection. And so when thinking about that would not cause me to go short something, but it would cause me maybe to think about, do I want to pull back a little bit, a drop? Do I want to not deploy, wait for it to pull back a little bit, right? So I think about those things because it's like little stories within a bigger story. It's like watching a movie. You see there's a big plot, but within it there's a little series of subplots, and right. And so you kind of think about that. As to going back to your question, what would make it? The things. It's not necessarily the things that people focus on, right? Oh, are the Kazakhs going to ramp production? The Kazakhs could turn the spigots on. I don't believe that at all. I believe the Kazakhs are a series of missteps since 2017, since we started looking at this. I think that the Kazakhs went from 9 million pounds in 2005 to 56 million pounds by 2014, and they were supposed to go from 9 million to 19 million or 21 million, and they went 2.5 times that, right? I think they really took a lot of the good stuff out and it's at higher grades. And I since then I think value over volume is as much where they're selling at higher prices. They'd rather have higher prices versus the volume. I think it's convenient for them to do that because I don't think it's that easy for them to peel out and just turn the spigots on. It costs a lot of money. You go back and you look at their all-in sustaining costs when they were coming public 2018, 2019, I forget which year the document was, but I think the number was a 340 tenge, right? And remember, they cost in tenge and sell in dollars. Um, uh, so they really benefit when the tenge is weak. And the dollar strong, because they're taking in dollars and their costs are lower. So at 340 tenge, they were they're all in sustaining costs in the mid-teens roughly, and projecting out forward. Well, here we are. Your tenge is at 470, so an even way weaker tenge, which should be more impactful. And yet their all-in sustaining costs are guided to be in the low to mid-20s, right? So like that's that their costs are, and before they devalued the tenge in the early part of the 20 teens, when the tenge was 85.90, their costs were in the 30s.
Hmm.
Um, so that it was a convenient currency play for a long time. Not to say they're not a behemoth, not to say they don't produce a lot of uranium. They do, but the casual observer is thinking, hey, this guy, I hear it all the time. Hey, this Kazakhs turn the spigots on. They're going to go to. It's not easy for them. It's been a series of reasons not to do it. Value over volume. Then COVID came. Then a tax came. There was one tax, an extraction tax by the government. Now there's a new extraction tax that really disincentivizes production and doesn't hurt price formation. So a series of reasons why they're not going to do that, on top of our own internal view of how easy it is for them to do that. So it's not what somebody might look at and say, oh yeah, that's easy. Some other people would say, oh yeah, as soon as the war is over, everything's going to go back to the Russians. Well, I don't believe that, because it took an act of Congress to get a Russian uranium ban in the United States. The United States, the largest consumer of uranium. It took an act of Congress for that ban to go into law, for that to become law. Well, it would take an act of Congress for that to change, and I don't think that's happening anytime soon. So it's not that. People. Another thing is we think about is you know. The Chinese, right? The Chinese have a lot of inventory, and they always have since I've started looking at this when uranium was $18. Um, they play a different game than we do. They play a generational game, multi-generational game. They look in terms of 50 years and 100 years, and they're on a massive build out of demand for reactors, and so they need decades of uranium. They don't have it yet, and so they're building into that. Should they stop? If the Chinese came out and said we're no longer supporting nuclear power, we are we're gonna go to natural gas and coal, and wind and solar is going to take over the day, and we are not supporting our commitment to nuclear anymore or slowing it down dramatically, that would be a reason that would cause me to step back and say, hey, right? So something like that. If the United States was to say, you know what, all these reactors that we saved, some of them we might turn on. We had life extensions. We're doing an about face. Well, at 30% of the of global uranium demand, that would cause me to say, okay, I need to think about that. That's not happening. But again, I have to pay attention to it. The same thing with France, South Korea, all of these countries that in 2017 were negative nuclear power. In 2017, when I was looking at it originally, the US was reducing dependency. The French, which generate 75% of their electricity from nuclear, was going to go to 50%. The South Koreans had stopped construction. They had wanted to reduce dependency. Forget the Japanese, they were never turning on those reactors. So that's already baked in back then. We needed supply cuts. Now you've seen growth go from nothing to a few percent, 3-4%. You still have a supply challenge. We think the deficits range, pick a, 18, 20 to 40 to 50 million pounds, depending on your tails that you use and depending on myriad things. But we think there are big structural deficits in the market. But if all of a sudden demand completely dried up, it's different at $18 uranium than it is at $80 uranium, $85 uranium. But we still think there's not enough economic mines. If you go back to, by our math, upwards of 20 to 25% of the demand of uranium required in 2030 does not yet exist. It's not, it's known, but it's not permitted, fully permitted, not fully licensed, it's not financed, and those mines have not been built. That's a staggering number. And if you consider what goes wrong in mining, when 1 out of every 5 projects is probably built on time, a lot can go wrong there. And then you take the brownfield, which are care and maintenance projects that are producing but can. That's another 8% that's needed for 2030's demand, right? So even if you had a complete 180, what I've seen in my tenure in this sector has been a total 180 from the world not wanting nuclear power, reducing dependency, to a complete 180 now to it's become a darling of global policymakers, right? And all the savior of this. But when these things are saved, announcements come day to day, price of uranium just yawns. It doesn't do anything. Why? Because these are multi-year contracts that are being signed over time, and they're on different time frames. But if the Chinese shut down their program or dramatically reduced it, or if the U.S. said we're closing a lot of the reactors, or if the French said that's it, no more, of course I have to re-examine it and do that. Obviously, if there was a nuclear incident somewhere, I have to do that. And we're constantly looking around the world with the countries that we know produce nuclear power and the countries that are talking about it. We don't put much emphasis on the talking about it because who knows how long will that be. But for the known quantities, who produces it, we're constantly staying abreast of policymakers and the views and what's going on and the energy economics and in those countries. But if we saw something dramatically change, yes, then we would do. If all of a sudden mines came out of nowhere that we had not heard of or were not thinking about or didn't know, if all of a sudden you woke up to a 50 million pound mine that's going to start in 2 years, we don't see it. 75 million pounds is coming online, and or I'm throwing numbers out, but it would make you step back and say, okay, I need to examine some things. Not resources. The uranium is abundant. It's everywhere. Countries have resources coming out the wazoo. They have it everywhere. but getting them into productive assets is very different. And so, there is that. This is not, we are not perma-bulls, nuclear power and uranium. We're 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 bullish or bearish facts. That's all. And as long as the facts are there, right, um, that support it, we remain bullish. The facts right now support it. We remain bullish. But if I can't constantly be bullish. I do very few of these. I do a couple a year now, three. I don't even know, 3 or 4, because I'm sick of hearing myself talk. Right? I used to do more, and I don't like. We talked before we went on air. Am I going to give the uranium thesis, right? Yeah, and you were right in saying so. Like everyone kind of knows the thesis. Um, so it's so yeah. That now again, the story within a story, the subplots within a plot. Um, there's very few uranium companies that I'm interested in owning, and I wouldn't give you much for most of them, because most of them are stories. Um, a lot. I shouldn't say most, but a lot of them are. Um, and you see it now more and more and more as the price of uranium's gone up, and I still think our view is uranium's got a significant amount more to go, and we could talk about why that is, but in any rising commodity price environment, it attracts more startups, it attracts more companies, and it attracts commodity chasers, companies who were caught up in the last commodity, and they got stuck, and now they're coming out here, and they go out and they tell a good story, and they got this or they got that, and you know, we're not putting capital in almost all of those, not all of them, but we're not interested in that. So I would stay away from a lot of those, not all, but a lot. Um, we don't, I don't like playing hero. I'm not a geologist. I'm not a mining engineer. We do ask for, we do ask for help on those to get better educated when we come across something we think is interesting to people who do know that. Um, and so yeah, so within that broader, we're bullish uranium prices, and I've seen people out there saying, "Oh, there's all this uranium." There's a couple of people that are very confident in their view of supply and demand, and they don't have it. From what I can tell, it's rather not informed, but it's more. Well, there's a lot of uranium out there. Well, okay, price is up 4 or 5x. Where's that uranium? Like, I'm sorry, we don't see it. But I think within that theme, you always need to be on guard for the individual companies, and if the story makes sense or not. Is it supported by the facts and the numbers and so on and the management team? What's their background? You see a tremendous amount of agency risk in these companies. Principal versus agency. Principal, somebody who owns a lot of stock, they might have more skin in the game, versus agency, they're just getting a paycheck, right? So that I think principal agency. Um, okay, great. You're telling a really good story. If this job doesn't work out for you, how much do you lose on the skin in the game? Oh, nothing. Okay, you go get your next job. Okay, got it. So, I kind of think about that in those terms. Um, yeah, and so we remarkably get very few inbound phone calls from companies looking to raise capital anymore. We still get them from the banks, but a lot of these new companies that are being formed, you would think they would go to people who they know are invested in the sector for a long time and can put money, but you don't a lot. And then we'll hear about them. We'll look up the company. We'll say, okay, yeah, oh, moose pasture, got it. Okay, check, moose pasture. Going out, but selling that story.
I think the only place that we can see 50 million pounds a year coming from is a potential shack somewhere in the middle of Africa, allegedly. But let's maybe not talk about that thing specifically. What about on an individual basis, though? I mean, you bring up the
And I'm
companies,
talking about, and by the way, I'm talking about in a period of contracting right away, right? Where it's going to
right?
come on, it's going to get built, it's going to hit.
Hmm.
Yeah, and you'll see projects over time, but in this contracting cycle, when utilities are starting to panic. But yeah, but you're always thinking, right? There's no reason you can't just say, I'm right and that's it. I'm right. We think we're right. We've been right, but we can always be wrong, and we have to convince ourselves why we're not wrong.
And that's fair. But it's interesting that you brought up the individual companies because, yeah, what about on an individual basis? Like, what would it take for you to short a uranium stock despite the broader theme being positive? Like, what's a, I don't know, a major red flag that you would see and say, kill it with fire. Let's short this thing into the ground.
Well, because I'm not because if the sector is on fire, I think they'll all go up for the most part. So
Mm,
again, I think the sector with a little lull that you get once in a while, I think ultimately prices move a lot higher. Um, but just in general, like what I would look at without saying specifically a uranium stock, just because of what I can say and can't say, just broader. A lot of it is for me, and it's not always easy with the tinier companies because there's not a there's not a trail. Like if I'm looking at a big company, I could, or my team here is we go back and look at the last 2 years of conference calls, earnings calls, go back and look at the last several presentations, and let's see the consistency. And it's unbelievable the variance you will see. Some management teams are very consistent with their message, others are all over the place. How did they answer this question this time? How did they answer it the next time? You learn so much from these. Um, but you can do it now with all the podcasts that are out there, is listening to management teams. And we really start there, because if we can't trust the management, a good manager could screw up a bad manager could screw up a pretty good thing. So we're looking to see, do we trust them? Um, have they made mistakes in the past? We all have. Everyone's made mistakes. Do they learn from them? No problem. That's all cool. But are they honest? Um, uh, Mistakes? Have they had any success? That's interesting. Um, as far as the project goes, then we'll if we can't understand it and if it doesn't make sense to us, and again, we're not geologists or mining engineers, but looked at enough over the years, you get a sense for maybe what makes sense and doesn't. If we don't, we'll go ask. Um, and then there's just some of those that there's just some management teams where you could talk to and they're sleazy, and they're full of shit, and they're dirtbags, right? And they exist, right? Where they just tell bullshit stories, or when you push them, when you're talking to them, you press back on them on what they're saying. They don't really have an answer for it, or they're slicksters. You could just tell those. But again, no, that doesn't mean those stocks don't go up multiples, right? Because they can, until and they're not until they're shorts. They'll go up until they don't. And so, but I think for anyone, certainly for us, we're very constructive. We're very bullish. I think the risk reward is spectacular. At some point in time, prices will dictate that, right? Fundamentals and prices will dictate it. It's tricky here too, because you often hear, is in the right question in commodities, is what's the marginal cost? Where is it going to be? What's the price at which the price has to get to, the incentive price, to where the market can balance? In uranium, that's kind of moved on from that, because the projects aren't built yet. It's not like they're there waiting. Now you're on the hands of, you're waiting for permitting, you're waiting for debt to be, you're waiting for strategics, you're waiting for stuff that always gets delayed and always takes a long time. So now you're looking for, price is going to be under, we believe, if we're right, that and I go back to the last cycle, and this is where anyone's heard me say, "Hey, shut up, Mike. You keep repeating yourself," but I don't know what to do, and it is what it is. Right, in the last cycle, I always go back to the same thing. And again, I'm tired of hearing myself talk about it, but it's the foundation of what we do. Is in the last cycle, the price of uranium went from 7 into the 40s before Cigar. For December, it was 7. It was in the 40s before Cigar Lake flooded, which everyone says was the reason the bull market started last cycle. The price of uranium was up 7x before that happened on October 23rd, 2006. And if I was a fuel buyer on October 22nd, 2006, and I looked out forward 6 years, a typical contract length, a reasonable contract length, there was 125 million pound surplus in the market, right?
mm.
So, okay, but there were deficits in the early 2000s, and they got worked off, and then you hadn't started a contracting cycle. By this 05, you started a contracting cycle kicked off. But looking out into the future, the prices then were in the 40s. It had come up from 7. That's a bull market by anyone's definition over 6 years. And then I'm looking at the forecasts We have them, right? We put charts together. We show them in presentations that we do, and it was 125 million pound surplus, and that's not our math. That's the forecast that was out there. And yet prices after Cigar Lake flooded in October 23rd, 2006, and it became obvious the biggest mine in the world that was scheduled to come online the next year was not going to come online. The prices went from the 40s to the 60s, and then a new forecast came out from the forecaster, and it showed a 225 million pound surplus, not deficit, surplus. It was 125 million pound before the flood. Over the next 6 years, the flood comes. We're not going to turn it on for several years. New forecast comes out. Without that mine coming online, it was 225 million pounds. Why? Well, the forecaster found other projects that were come online. Demand came off a little bit. Net, there was still a surplus in the market, and prices went to $137 over the next 6 to 9 months. That doesn't exist today. There is not a scenario that we could find where there are surpluses in the market. Even the forecasters have slight deficits. We have much bigger deficits. But so as contracting is starting to happen, and you've had a lull in the first 6 months, you had a big contracting year last year for the first time in, I've said this before, from early 90s to 2005, five being the first year contracting took off, utilities replaced their annual consumption via long-term contracting by about 35%. So that means they were drawing down inventories for the other 2/3. And then that happened from the early 90s to 04, 05. And then all of a sudden, contracting went to 110, 20, 30% some years of annual consumption. They were restocking. They let their inventories go bare, and then they restock. From 2012, after Fukushima in 11, through 2022, it was about 37%. Same playbook. They were drawing down inventories. Last year, they did 160 million pounds of contracting. So you were getting close on, we don't use the forecaster's numbers, we use our own, a couple 100 million pounds. So you were getting close to replacement rate contracting. This year, you're only halfway through the year and you're at 31 million pounds, right? So what's happened? You've had the Russian guidelines come out, the Russian ban. So you're not sure, right? There's a lot of uncertainty. What are we going to get a waiver or are we not? The guidelines are being worked through. You get more clarity, and we think the back half of the year you see more contracting. But the difference is, as the rubber meets the road, and the utilities start to accelerate the contracting, there's not enough economic supply to meet their future needs. And you have to look out 15 years here because that's how long it could take to find and bring a mine online. But we go back and they contract. They want that security of supply. In the last cycle, you had 20 million pounds per year. For those who don't, just to wrap some context around that, in the market then, 170 million pounds a year, you had 10, 12% of the market guaranteed supply coming in from the Russians down blending nuclear weapons and sending it into the U.S. after the wall fell. The megatons to megawatts program. It was guaranteed supply. It came in. And then you had the Kazakhs, who I said earlier that in 05 they were producing 9 million pounds. They were forecasted to get to 19 to 21 million pounds. By 14, they were at 56 million pounds. So you had massive new rates of change of supply coming in. Neither one of those two exist. So by our math, when we look at the future forecast, we look at significant deficits. And as contracting starts to approach replacement rate, when there's not enough economic supply, and again, it's interesting. It's not all utilities. Many utilities are covered for a reasonable amount of time, but it's those that are not. And those that are not are less in number probably than those that are. But it's if we go through 2040, there's 2.3 billion pounds not covered. Or said differently, we were just looking at it through the mid 2030s, 9 of the next 12 years are not covered under contracts. They don't have the uranium contracted for. It's this pretty staggering amount. And when those that don't have it come into the market and can't find it, that's when the panic sets in. When that is, we don't know. We think it's closer than not. But last time panic set in with a surplus in the market, we shudder to think where prices go, right? 137 last peak was 200 today's dollars. Again, had they just stepped back and let cooler heads prevail, they would say, wait a second, what are we doing? And those, by the way, that was spot market. Contracts were being signed in the fixed. You can get prices then in the mid 90s. Fast forward, in those dollars, in today's dollars, into the well into the hundreds.
Yep.
But cooler heads didn't prevail, and so now though, if cooler heads were to prevail when that starts, we don't think they'll prevail that long because they're going to be facing down a barrel of big deficits. And that's where we think pricing can go to wherever the market takes it. And it's not, oh, what's the marginal producer need? You're past that. The mines don't exist. So, that's kind of how we think about it.
What I wonder about in that case and in the broader topic of shorting, and like a couple of times we mentioned that there's not that many great companies. So the fact that that's the case, the fact that we have such a bullish setup in uranium also kind of dictates the fact that there's not that many great companies. I mean, if this was an amazing business and we had great companies, there was going to be a way quicker response to the price going up. And so what I wonder specifically around that is how do you deploy that much capital that you do in this small of a space? And I don't know this to be true. These are my own estimations, so this is not you saying it for whoever's watching, but I'm just going to assume that you're managing several hundreds of millions of dollars, not quite a billion. I don't assume, but you feel free to talk to me about that if you're allowed, not if you don't, but a lot of money for this small space, right? So how do you deploy that much money in a space with so many bad names, where I think the ratio of bad to good companies in uranium is way worse than it would be in other subsets of the market, right? So how do you even find enough good stuff to buy with that much money is what I'm trying to ask.
That's a great question. It's a fabulous question. I've not been asked that, and I like the question. I can't answer. I mean, we have a 13F that gets filed out there, but it's only on domestic names, so it doesn't give a real good reflection, and it's dated and stuff like that. So, but a good amount. So the it's one of the reasons when you think about the art of investing versus the science, if you find a sector that people want to be a part of and want to participate in, and there's fewer ways to play it. And I used to say this many years ago: is there not just a shortage of the commodity, but there's a shortage of the equities, and ultimately that will put a premium on those that that investors will deem are trustworthy managements, have good projects, have some sort of an ability to grow and expand their reach, can be a consolidator maybe. And so, one of the things that we do as analysts is to understand the future, you have to understand where you came from in the past. And so we use guides as where did these things trade in the past? What multiples and are the cycles? What are the similarities and differences? What would cause one to trade? When and I've said this too, it's like putting a pig through a python. When you've got a lot of capital coming into a few names, those names that are quality, that have liquidity, are going to trade at levels likely more than one might rationalize. And anyway, it goes into being short something. You never short valuation in any industry. Valuation is not a reason to short something. It's fundamentally you see something. Oftentimes, a good short will be overvalued, but value in and of itself is not a reason to short. You need to short with an eye towards a reason for that valuation to compress, whether it's going to be missed earnings or missed fundamentals, something happens. But just saying I'm going to short it's too expensive, it's stupid. I was taught early on by a really smart world-class fund manager who I worked for, don't ever, you're not the arbiter of what someone will pay for something. And don't be so arrogant to think that you know what someone else is willing to place a value on. You need to understand what's going to cause that person, if they own it, to say, I want to sell it. And it's not valuation, because they knew what it was probably when they bought it, and they let their winners run. So it's about what is it that's going to cause somebody to do that? Conversely, here, when like I said, oftentimes little crappy companies rip the most, but the institutions aren't playing in those, right? So that's a different game. They can't play in those. They can't, most. I mean, you could have small, really tiny funds that would do that, but for the most part, they're not. But when a theme starts to catch attention, and now we've had nuclear's becoming a theme, AI accelerates it a little bit, but this has the attention of bigger investors. And when that pool comes in, they go to where the more liquidity is. And then that's where you get into valuation is you shouldn't assume what somebody's going to pay for something. There's scarcity value both in assets. There may be a scarcity value in an asset or a service that somebody has, or a land, or the incumbency, right? People place great value when there's a scarcity of something on incumbency,
Hmm.
on competitive advantage, on ability to produce, on ability to generate cash flows. And so what somebody's willing to pay for that, the market will figure that out. So as my expression of you, earlier on, we found some smaller companies that needed financing to be interesting because you can help do that a little bit. Over time, that's become much less interesting to us, for myriad reasons. But in the universe of the names that I find an interest in, you start to you learn them all, and that's a very narrow universe now
Yep.
for myriad reasons. Do I trust the management teams? Do I like the projects? Do I see where they're situated? I don't think it's broad. I think I'm not saying it's a few. It's more than a few, but yeah, it's select, and because of that, but because I believe so strongly in the theme of and the price of where the commodity has to go, I think that goes into my calculus of what I think some of those companies with people who might think like me would place on something, on value, what value that would be.
Hmm. You're making me think about a couple of names that very well fit that broader description that you just gave me. Um, but you're also making me think about really why. I know I'm kind of being slow. That's how typically I am. But what I'm
No,
thinking here is,
that makes two of us.
stop stealing my jokes, Mike. But what would it? Let me. I've given you many hypotheticals today, so let's maybe keep that theme going. But what would it take for you to say no? It's the other way around. Like I think you're not necessarily out there looking to get new money to manage. Like you're kind of topped up right now. What would it take for you to say no? Let's go very aggressive on marketing because I have to invest every dollar I can find into the space. I have to triple the fund and go way heavier than I already am. What would it take for you to see that either on an individual equity level or the space as a whole?
Great question. Um, so you sometimes get big sell-offs on that are not correlated to fundamentals, right? If you had a big macro sell-off, you have a factor sell-off. I think you've seen some of the uranium equities being weak last few days because people are thinking, oh well, if Trump looks like he's going to win, that's bad for clean energy, and it gets factored. Nuclear gets lumped into that,
Okay.
and like that couldn't be further from the truth. But the quants, the algos, they don't think that, right? Clean energy basket sell, like wow. If that had a lot of legs and you saw a major pullback, um, so everything I think of things just in terms of risk reward, and price plays a role in that. So you can't. I don't think you can be always bullish, always bearish, right? These are living, breathing markets. They take on a life of their own sometimes. There's plots and subplots within subplots. So for that, it would need to be, I would need to see a disconnect between. I already think there's a disconnect between price and value here. There's a big disconnect there in the marketplace. So it just would depend, if you saw just something. It would have to be something material that would cause a tremendous sell-off that would do that, you know. But yeah, it's I find the marketing of marketing too is time consuming,
Yeah. Yeah.
and I don't like doing it. And so
You got to
um,
repeat the same story all over again and go on all 75 podcasts that now cover uranium
I,
too. So.
I'm so sick. I've said it before. I'm so sick of hearing myself talk about uranium. I love when I do podcasts or whatever, and I like I say, I only do a few a year now
Mm.
for that. I
But
think.
I appreciate you taking the risk to make me one of those few. So thank you. That
Well,
is,
I'm not that interesting. I don't have that much to say, so you know.
I don't know. We've been talking for what, about an hour and a couple of minutes here. So we're probably not through the half of the stuff that I want to talk to you about. So, I hope you've got plenty of time this afternoon. But right, you make a good point there because what I've heard you mentioning before too is that there are different ways to go long uranium in different moments of the cycle. So essentially rotating money from one type of position into another type of position during different parts of the cycle. And I just thought, what does that look like specifically? Maybe you could break it down into stages of the cycle and what the
Mhm.
respective ways to express bullishness on uranium are during that
Sure.
stage of the cycle. Does that make sense?
Yeah, yeah, it does. I also want to go back to when I said mine 50 million, 75 million. I didn't mean total mine size. I meant per annum. When
Yeah,
we were
yeah.
talking, yeah, yeah. Um, that would be a heck of a mine. But so there are times where I think the equities get ahead of themselves, and I will, and I'm happy to raise cash in doing so. Where and I say get ahead of themselves because ultimately nothing goes straight up, right? There's expectations. And when I'm thinking about the market, I'm thinking, in the physical market, what do I sense? Does it feel heavy? Does it feel like there's a couple of traders who might have 500,000, 750,000 pounds that they might want to get rid of? And again, we use our round numbers, big round numbers, a couple 100 million pounds a year of demand. You're talking 500,000 pounds, you're talking nothing, right? But there might not be a buyer for it just that week, and the price can go down. And so if you feel that like that, but you're seeing the equities go like that, you're like, okay, well, every day the price is inching down, or price gets reported, it's going down, it's going down, it's going down, but the equities keep going up. Sometimes that has a way of correcting itself, and because ultimately that's unusual. And so you step back and say, okay, price is being reported a little bit down. Um, you know, there are times where maybe you just say, okay, maybe I'm going to step back a little bit, or you feel there's really good news being reported, and nobody cares, and you're like, wow, I can't believe the market's not digesting this, right? Like, because oftentimes uh, what might happen is really good news does not get reflected into the physical traders don't care. They have time horizons of tomorrow, next week, and the week after, and a few times maybe it's a month. That's it. So really positive supply demand news could come. So and you could have great news on the demand side or some strict supply. And more supply, you might see it into the market, but it could be a tremendous demand out, and the price isn't going to budge. And um, you can say, well, wait a second, I think this should start to get reflected in a reasonable period of time, and nobody's paying attention to it. And maybe you want to commit more capital. That's all I might think about that. Um, and there are times where I think you might just be able to find somebody that wants to sell some physical uranium, and you're willing to buy it at a discount from what they're selling it at, right? And that's another opportunity you have. And remember, all of the price reporting doesn't pick up all transactions. They pick up what market participants want. There's no obligation by anyone to report price to a price reporter. So um, they pick up what they pick up.
So they can
And
lie.
so no, but you just don't have to. A price reporter goes around and queries, is there anything we should know? Did any transaction take place? A lot of times market participants have a transaction and there's no obligation at all to say, yeah, a price transacted.
Mm.
So it's, it's an over-the-counter market. It's opaque. It's just kind of, it is what it is. And so, but there are times where the physical market might be more appealing. There are times where the bigger market, uh, if you sense that there's a groundswell of institutional capital that's coming into it, there's only a few places they can go, right? It's only a few companies that they're going to go buy. Um, and again, what's the reason for it? Is it coming in because AI is the reason they're coming in? You're like, oh, okay, well, that let's see how long that lasts, because all of a sudden, as soon as the price of uranium drops, they're going to roll over, which you
Mm.
kind of, maybe June might have looked like that. And so, or there's other times where you're like, wow, um, just God, I've had so many inbound phone calls from big institutions wanting to learn, that they never mentioned AI, and they're really excited about what's taking place. They want exposure. They think that this is a unique cycle. Or I've watched a lot of interviews of people, and they're starting to talk about it that normally wouldn't talk about it. They run a lot of capital. Oh, okay. Well, you might want to pay attention to that, right? To see, because capital flows going
Mm.
like that. Um, and then there's times where, like in the really tough times, where people are running away, and uh, when the market's in a deep bear market, that might be the time where you want to help companies, if you're in a position to participate in financings, right? Because capital is scarce at those times, and you can get good terms. You can get good discounts on, you get warrants, and you could do stuff like that. So it's all cycle within a cycle. It's all art, a lot of art and science, but not typically not static. Um,
Mm.
you know, you just have to be aware of what's happening uh, in the market.
What I mean by the different stages of a bull market, really, when I ask this, and I'll probably butcher this quote, but Sir John Templeton had said something along the lines of bull markets are born on pessimism, they grow on with skepticism, mature on optimism, and then they die on euphoria. I
Totally,
hope I'm getting that right. But so basically,
you
four
are.
stages of a bull market.
Yep.
Do you subscribe to that belief? And where would we be in
I,
uranium? And yeah,
it's a great question. I think there's, yeah, I think again, another guy like many who's far smarter than I am, John Templeton. Um, but I think there's a foundation in there. I think every market though is different. I think when you generalize too much, look, it's a heuristic, like a lot of heuristics take place on Wall Street, right? What's rules of thumb. Um,
sure.
I think there's reasonable thought to that. Um, I think here you have to really, but I think if you don't take the time to understand the individual dynamics within a specific market, that the playbooks and heuristics can lead you astray. And so one might be able to say, well, look, geez, price of uranium's gone from 18 to 85, and it was at 106 for a brief moment. That's your euphoria, and it popped, and it's going here. And I would say, wow, you haven't taken the time, not you, but someone who has that view, I would say you haven't studied the supply demand dynamics. You haven't studied the contracting cycle. You haven't studied the market participants on the physical side. You haven't studied the permitting and the licensing, and how much you haven't done the math, and you haven't done the stuff. And so I would say that's, but you're not in a euphoria stage here, but you have seen a few euphoria stages, and it tends to back up a little bit, right? So it's again, those stages within a bigger stage, right? So you might have periods of that, the plots, the subplots, the euphoria. It's going to the moon. Everyone's excited. I don't spend a lot of time on Twitter, but somebody will flag me and say, "Hey, you should see everyone's despondent, or everyone's euphoric." Right? You could fade either one. You could take the other side of either one a lot of the times if the fundamentals are supportive. So if everyone's euphoric, you might want to fade it a little bit. By fade it, you might want to take some off the table. Doesn't mean you don't like uranium. You want to trim some, right? Take it. If you think it's euphoria within a bigger picture, that ultimately will have ebbs and flows. There are periods where you get major pullbacks within a still much larger big bullish cycle. just got to kind of understand that. Same thing that everyone's despondent. Oh my God, it's down, it's down, it's down. I don't understand. Everyone's calling me. What happened? Well, nothing changed. I don't know. If there's more sellers for some not macro uranium reason. I don't know. Let me buy more. And so I think it's good to be aware of that. But I think ultimately you need to be aware of, is it a bit, is it playing a small role in a bigger story, or is it the story? And that's what's important to understand, is where you are in that. And I don't know how it's a feel, right? It's it's understanding, seeing the forest for the trees, essentially, is what it is. That's why
What
so much of investing is art, not science.
knowing that though, is there that kind of makes it tough for me. I'm an accountant by education. I like doing things by the spreadsheet. That's how I lost half my money. Obviously, I'm going to keep doing the same thing because maybe it's going to work this time. Kidding, of course, but what is knowing that, would that also influence your position sizing then too? I mean, how do you even, that's something I'm personally completely unsure of as how to go about it, but how do you determine how big of a position to take? And is it dependent on the short term fluctuations in sentiment?
Speaking in generalities, not speaking to any specific, because I have to, generalities, just as a thinking about portfolio manager of any portfolio, not a specific one. Um, yeah, I think nothing is in concrete, right? For me, any position size and anything I look at is based on risk reward. Um, do I have 3-to-1 upside downside, 5-to-1 upside downside, 8-to-1 upside downside? That determines position sizing in part, right? Is it really speculative? I might have 8-to-1 upside, but it's in a really tough part of the world, and I think it's, I think I'm risk adjusting that. Like, how crazy of a risk am I willing to take on a jurisdiction I'm not comfortable with? Or oh my God, this is an unbelievable asset, but this management team's a disaster. Am I willing to own a little bit? There are times, yeah, but you might put a little position on, and if no harm, no foul. If it works 10x, you make some money. If it doesn't, you didn't lose that much. Or, is this a really great asset with a really good management team with a really nice risk reward? That should be a bulky position, right? How do you think about that? People have all different views. Should something be 8%, 10%, 12%, 15%, 20%? I think it's always wise to spread your bets out a little bit. I don't think you need to spread them too much. Just my own view on, and not talking about any vehicle that we have, just in general. I think diversification is fine, but position sizing is a function, for my view, of risk reward. Um, and again, the other stuff. Um, I don't subscribe to bet the ranch on one or two things. I just don't, because stuff can happen.
Yeah. But you also don't have any hard and fast rules where you say, oh, you gotta have 10 positions at a time or weight them
You
equally
know,
or something like that.
so I think those are great for selling, for people who want to sell subscriptions to stuff, uh, or checklists and playbooks and rules, and this is how you do it. Um, it's so hard. Being a PM is hard. Getting things right is hard. You make so many mistakes. You look back, you kick your, all the time, like, oh God, how did I do that? That was stupid. Why did I do that? Um, I don't, and I do. I have, like, we have a checklist of things. We have, I have 10 pages of lessons, I'll call them, things to look for, right? And then there's always, if it's 10, I'm making it up, it's 8 or 9 or 10, but if it's 10, there should be 11, because and then should be probably 15, because I'm going to miss a lot of stuff.
Mm.
Um, I don't, you know, it all just kind of depends. It's situation dependent, right? Because if I look back from 2018 to here, 2018, 2019, uranium stocks couldn't get it out of their own way. But in my view, the fundamentals are still the same as they still shortages, right? Coming and coming and coming and coming. And then 2020, 21, they go on an absolute tear. And then 22, they go down. Why? I don't know, right? If a handful of reasons, but it's, you just got to kind of feel of the moment, like, just sense, like, Is there too much in the bigger picture? Is there too much excitement? Then my positions might be smaller. Is there too much fear? My positions might be bigger. As long as the general overall thesis is intact, and that's where I worry all the time. And you have to have paranoia that you're right or that you're wrong,
Mm,
right? It's where am I wrong? And I think if you don't, that's very healthy paranoia to have. Um, so, because Laura, there's many things that you try and surround it. You asked me, I think, yeah, I think we have it pretty well surrounded, but you always have to assume you're wrong and try
mm,
and look for it. When I see people being interviewed that are so cocksure about what they know and what's happening, like, get out of here, you know, like that's false bravado or they're morons,
mm.
right? So,
It's oh, and cut me off by the way, Mike, if you have to go in the process. I'm known to be chatty, so if you whenever you have to go, just let me know, and it's
no,
not a problem at all. But have you have you thought about, and that's maybe a dumb question to put it that way, but of course you have thought about it, but when you think about other sectors still today, how do you think about them, and why not, as you're doing some of that rotation or some of that diversification that you just told me about, why not rotate some of the profits from what is now not necessarily a contrarian play anymore into something that is unloved? I don't know what that would be. Another metal, another market.
if you look at our 13Fs, you will see there's a different uh, way to express the view. There's uranium, and then we have another way to express the view in something else um, that we have found very interesting in, for instance, the offshore drillers, which we've owned for quite a bit,
Nice.
and the service companies in offshore. Um, so we've had some there, and we're always looking for within the cyclical industry. We're always spending time and doing work on those industries that are more out of favor at any given time. It could be platinum group metals that we find interesting. It could be um, offshore. It could be natural gas. Those are things that we find interesting. Within a broader commodity context, um, oil services, um, and stuff like that. So we do. We're always paying attention and doing work on those things. Sometimes there's one-off opportunities you find. Other times there's thematics within the broader commodity complex. Agriculture. We spend time looking at ag,
Hmm.
which is very very out of favor right now.
Yep.
The fertilizer stocks, people can like just can't give them away, and we find some interest there. So
Hmm.
yeah, we do. But and it's all thinking. It's interesting. We have some interns that are with us, and to see uni and people's in their late teens, early 20s, and how they think and stuff like that. Um, they're so smart, so many of them. But uh, when you're talking about in our world, bad is good and good is bad, right? Supply cuts in our world are good to a person thinking, well, why is less good? Like, why is that good? It's a different way of thinking about the world. Low cure for low prices is low prices. The cure for high prices is high prices, right? You think about that. It's counterintuitive to a lot of people. They want to run away from low prices, and they are attracted to high prices. So in our world, for the first thing I think about when I see things really bad is, oh wow, they're going to have to cut supply, and then how's that going to impact it? So where prices are way too high, I'm like, oh my God, that's like the cartoon character Wile E. Coyote over the cliff with his legs running like that. So,
Yep.
so we're always, yeah, we are looking, and within those, there are multi-year themes. We think there are some that are more short-term nature in nature. But we do that. Yeah.
Hmm. Is there an equivalent of uranium in 2015 that you're seeing now? Like you mentioned platinum group metals and all that, but I don't see the same supply deficit elsewhere in the market.
Yeah. I find PGMs are interesting, and it's hard to find a great way to express the view because it's South Africa and Russia,
Yep.
a lot of it, right? But there's there are similarities in the sense that you've got supply that is tied up in one is Russia, platinum and palladium, they're different, but they had significant portions of the market. South Africa, some could argue, is a failed state with or a very tricky electricity situation, right? These are very deep underground mines, very labor intensive, not really mechanized. You see labor cuts, but you see half the cost curve is underwater
Mm.
in PGM. So you've got something that half the cost curve is underwater. You've got supply in very unstable, if not unstable, but geopolitically challenging hands. So right away, I could think of two similarities to uranium right there.
Yes.
Um, uh, when you look back, and also you have, if we're looking at palladium and platinum, palladium more so, where something like 80% goes into catalytic converters. Platinum less so; it's more industrial and other uses, but also a reasonable amount for catalytic converters. But people left it for dead because you had EVs were going to dominate the world, right? Um, and so, not to say that EVs won't grow, but there's a difference between 75% growth and 15, 20% growth. And and again, people take playbooks and they write everything off. So what did they do? They wrote anything that had to do with an internal combustion engine is written off. And so, there are ways within the platinum group metals. There's ways besides just miners to express the view too, because the miners are in those tough states. So you have to look through it, but there's some really interesting similarities there. In one, I mean, palladium's gone from 3,000 down to 1,000, right? And so you just have to, there are things in there that we find interesting. Natural gas is also interesting. You've got the U.S.'s natural gas prices have been so low for a decade because of the shale plays, and you've had tremendous supply, not a lot of way. Now it's interesting because the world needs LNG, but the U.S. hasn't had enough of the ability to export a lot of it, so it's gotten stuck here. Prices have stayed very low. It's materially lower than the rest of the world, natural gas prices. And there's a significant amount of LNG capacity coming on over the next couple of years that will give that place a home to go to. And if you look around LNG, you look at natural gas prices in Europe and Asia, they're materially higher than here, many multiples higher. And because ours is in North America, it's kind of stuck. But as you have these LNG terminals come on, there's a case to be made, and during a time where there's evidence that would point to um, the the shale gas starting to roll over. You've had a couple of areas that it already has, and in other areas you can argue that it's starting to, at least the rate of change is starting to slow. And so um, between that, then again, you talk about AI, you talk about other stuff. The amount of demand required just from those by the next several years that will need natural gas is significant. So it's a nice setup there, and the stocks have started to hang in, even though natural gas pricing has gotten. It had a little bit of a rally in the second quarter, and then it's been beat up here recently. And the stocks are starting to digest it. They're starting to hang in. They're starting to look at what's happening in 25, 26. So we think there's some interesting stuff that's happening there.
Mm.
So yeah, we're always looking at different things.
It seems though that uranium has kind of pulled you to the natural resource space quite heavily, and a lot of things that you're talking to me about are focused on it. Like unfortunately, I didn't hear you saying Tesla is like uranium in 2015.
Yeah, I'll keep my
That
views to myself
that'd
on
be a fun conversation. We can make a
that.
podcast on Tesla alone.
Yeah.
Uh, it, I there's a lot of stuff happening in copper right now, specifically on the M&A front, and someone was making the argument online, some account on Twitter saying that, oh, we're in the euphoria phase, to go back to what we were just talking about, of copper. And it's like, I didn't believe that at first. And so I click on the comments and I'm reading through them. And someone said, we cannot be in the euphoria phase before M&A has gone through the euphoria phase, which I thought was an interesting point. So what about M&A in uranium? I mean, we have one deal on the go right now that's maybe at this point not the best deal, whatever. But we've had a few, again, questionable deals being completed before. Do you think that M&A will not only ramp up, but maybe do you think it will get better? Like, are we going to see some better deals being done here, and at what stage of the market would that be?
Yeah, that's another great question. I think you should see some more deals. I think it makes more sense for consolidation to occur.
Mm,
Um, for geographic purposes, for strategic purposes. Some companies have much greater strengths than others. They bring different things to the table. I think it's very you often see the majors wait until prices really go bananas, and then they come in and then they buy at the peaks, right? Um, uh, I don't consider the one that was announced recently. That's not a major mining company buying another one. It's a small mining company buying a development company. I don't place much value on that as far as an indicator of the market. I think there's there's the bigger companies that I think I think uranium, and I don't know how this evolves, but I think as we started a private project in 2018 in Wyoming, and we leased a bunch of land, and now it's public. Through we partnered up with ISO and Mega, and they then brought it public. Um, and that, but in doing that work in 2018, 2019, looking at all the different projects that were out there, it was amazing how much oil and gas oil companies you would see on the drilling data, and in uranium, how much involvement they had. They were a major participant in the uranium business, and that disappeared in the 90s and or 2000s. Natural gas became their darling, um, and I think as things are always evolving, I think that it would make sense for nuclear to be appealing to oil and gas. It's clean, it's carbon free, it's in vogue, it's popular, bipartisan around the world right now. It's green. All that checks a lot of boxes for oil and gas, and just on a if you accept that oil companies, uranium companies, natural gas companies, they're in the business of providing BTUs, uh, uh,
yeah,
right, of energy.
sure.
The staggering amount of BTU equivalency you get from nuclear, and is mind numbing. Um, one of the major development companies would account for almost half of the reserves for ExxonMobil. If they looked at it that way, they don't. But it's an enormous amount of energy content that is available for for pittance compared to what the market caps of some of these guys are. So I don't know if that evolves, when that evolves. I don't think it's too far a stretch to think that somewhere down the road later that can come into play. And then of course you have the major mining companies that always pop their head up. They did last cycle. I have no reason to believe they won't this time. I think there's sovereign wealth funds that would be interested in participating, as many of these countries have um, nuclear commitments, expanding their nuclear fleet, whether it's strategic or wanting to buy something completely. There's a lot of you're still in I think in the very early days there. Um, I think I was in February. I was invited to speak at a conference where there were 27, 28 participants, some pretty sophisticated investors. And it was called the 13D Brain Trust. There's a research firm called 13D that does some really nice work. And yeah, I mean, we're talking, there were a couple of monster sovereign wealth funds, the two of the biggest asset managers that manage trillions on the planet, some high profile mining people that were there who everyone would know their name. Um, you know, and I gave a 45-minute talk on uranium. The
Hmm.
vast again 27, 28 people in a small room sat around. We were there for 2 or 3 days, having lunch at someone's home, dinner at another home. We had a conference table at this club where we sat and talked, and I talked about uranium. And the majority of people there came up to me and said, "Wait, refresh me on uranium? Like I haven't looked at it in so long, I forgot it was even a thing, or tell me about it.
Hmm.
And these are I had one of these massive asset management firms say to me, I have an army of people who allocate capital telling me I should be looking at certain commodity, uh, but nobody's telling me yet that I should be looking at this. It sounds like this is something that we should be looking at.
Hmm.
And you're like, yeah, it's early. It's early days still from that regard. And these are sophisticated investors, not anything other than that. And so, well, we hear when you're in it sometimes day to day, you're like, wow, it's still, boy, everyone knows this story. You realize, like, holy cow, these are sharp institutions that hadn't even really been familiar with it. Um, so I think from an M&A perspective, from a strategic investment perspective, I think there is scope for a lot to happen. So I don't think you're anywhere near a euphoria phase. I think you're probably on that front in an exploratory stage.
Yeah.
Probably people just dipping their toes in the water.
We often celebrate whenever a mineral or metal or whatever is added to the Critical Minerals Act or whatever of Canada or whoever else, and but what's happened to uranium here kind of makes me question the M&A narrative and where that's going to come from, because a lot of the large diversified miners are not Canadian companies, and we have this who was the minister, I forget his name, whatever, Canadian minister of something something, making a statement that deals that are going to be targeting companies that are involved in the critical mineral space
Mm-hmm.
will not be as easily approved. Do you think
Mm-hmm.
that's going to affect M&A for uranium specifically, or in any other way?
I think it could. I think some of the bigger miners are Western friendly. Um, if you think of who the big miners are, I think many of them
Hmm.
are you have something to do with the crowns, former crown colonies or a former part. I think that they would. I think I'm not sure. I think I be frank. I think if the Chinese came in and said we want to buy something, I think there might be an issue. Um,
Yeah.
right. So I think it is. I think the world is bifurcating east and west.
Sure.
Right. So I do think that you can see. So I do think it does reduce it. I think about that too with the sovereign wealth funds, like because
Mhm.
how much would they be allowed to own, right? Um, so there are those, and if you're doing it in the U.S., you have to go through a CFIUS test, right? It has to get signed off by state, stuff like that. So, but I think that's existed for a while. Heightened. It's a good point, though. It's heightened now, but I think the major capital, if you think about the Western, whether it's Western oil and gas or Western miners, most of them are, I don't think would have a hard time.
Yeah. Well, I'm just thinking if that makes Canada an even more challenging jurisdiction to put money to work, because it seems like they're actively trying to make it a bad jurisdiction to put money to work with this new tax thing. Uh, Now this, the minister's saying, "Oh, we're going to make it tough on companies wanting non-Canadian companies wanting to acquire critical minerals projects and stuff like that." What do you think of Canada as a jurisdiction to put money to work?
I think say what do I think of Canada? I love Canada. It's nice people, home of hockey, great, friendly people, um, smart people. Uh, you know, I don't. I get it. I understand why people say that. For my purposes, you know, the Canadian investments we have, I think are, we own. I talked about. I think Canadian oil sands companies are interesting. I think Canadian natural gas companies are interesting. The jurisdiction on that hasn't. I think if any, I think I'm looking individually. Like I think there's an LNG terminal going into Western Canada that's just launching, starting. I think that makes it easier to own a Canadian Western natural gas company. So I don't necessarily. I think there's rule of law. I think there are some challenges, of course. I think provincially you got to be aware of different things, but this isn't this year. It's not. I mean, it is. You see what happened there, right? It's tough. These are tough neighborhoods. I don't view Canada like that. Of course, I appreciate those who say it can be more challenging, but I think it's better than a lot of other places could be. Are.
Good point bringing up Niger, because what seems to be happening there, you tell me if you think that's true, but there's some decent projects. They're not high grade, but they seem like the economics check out on the surface. But there's also large projects like Imoraran, for example. What do you think is happening there? I mean, are they becoming the what's the equivalent of a moose in Niger, like a hyena pasture or whatever? Hyena don't eat grass,
Moose
whatever.
pasture. I don't,
Moose pasture, but they ain't got no moose, and they don't have any moose in Niger. Do you think they're
you know,
becoming moose pastures or the equivalent thereof in Niger?
it falls into the category where in the too hard to understand pile. I mean, I'm a I like to watch and listen to all sorts of geopolitical people. We subscribe to some, um, but that's my view is meaningless. Like and I think most people's are. These are tough neighborhoods with with no rule of law or a very limited rule of law. You see what they could take it back if they want to. Um, so I don't know. What I do know is if I were a Western utility and I were thinking about contracting with one of these, I would really worry about it because who knows? I think they should apply that more often. But I there's so many things that I'm not good at. Trying to figure out geopolitics in West Africa is one that is right at the heart of another thing I don't know.
Hmm. What do you then pay the most? Like, I mean, if that's not a jurisdiction you necessarily want to employ capital, it is. Are you focusing on Canada and the U.S.? I know you're involved with a, if I'm not mistaken, a company that is focusing in the U.S. Somehow. So is that the two jurisdictions you're focusing most
Yeah,
on?
Canada, the U.S. We have Namibia. For the most part is a reasonable jurisdiction. It's good. They've been mining uranium there for a long time. We're relatively comfortable there. So but in the really tough neighborhoods, and not to say we haven't. I have in the past been there. Not physically in this year, but have owned things there. But I just kind of decided a while ago that I have no edge there. Not that I have an edge
And it was before the
jurisdictionally.
was that before the? And I'm sorry for interrupting, but was that before the unrest?
Yeah, pretty much.
Oh,
Yeah,
well,
we had a tiny something during, but meaningless.
hmm,
But yeah, I kind of decided, you know, again, if I can't figure it out and I just go, man, this is tough, this is hard, this is tricky, and again, like you learn like the changes. There are times where political situations in countries are different, but at the end of the day, if I allow myself to be honest with myself on these things, I have to step back and say, if I wake up and I have a meaningful size position in something, because I like the risk reward in a country where stuff can happen that I have no idea it's going to happen. And I can look back and probably say, shit, you dummy, why didn't you think of that? That was so obvious. Then I don't have a really, I should probably shouldn't be there.
hmm.
And I just don't know. And I see a lot of people way smarter than me talking about it on the news or on podcasts. Then they whatever works for them. But yeah, there are times where you just slap yourself and say, wait, what are you doing? Stop
Hmm.
this, and that's kind of where we came out on it.
There's a jurisdiction that is hard and tricky, but you basically have no other option but to follow, and that's Kazakhstan, right? I mean, is it west, is it east, is it China, is it Russia? What's happening there? And there's a bit of a freak out about it on Twitter, but just recently, last week or something like that. What what do you? I mean, that I suppose you kind of have to pay attention to what's happening there. Are you
Sure,
paying attention to it?
very much so. And
Hmm.
I have a history with them going back years where they had one of the prior management teams had asked me and my team to go over and meet with them in London to share our our modeling with them,
Hmm.
to share our supply demand because they were just really taking an industry forecaster's work. So they asked us if we would mind sharing our view of the market, which we did, and that was after we presented at the NEI conference in Nashville, where we put up a very variant perception from what the market was looking at. So they were a very open-minded group at the time. Um, so yeah, we have spent a lot of time thinking about it, understanding it, knowing the lay of the land there. Um, it is it's a they're in a it's a another tough neighborhood, right? They've got two tough neighbors, and they want to try and keep them both happy. So it's got Russia and China right there, and they've got them as JV partners amongst others. But just my view is, as much as I think they would like to probably, if left to their own druthers, they'd probably rather shift west, maybe the people. I don't think that's happening at all. Uh, and I don't think that. I think yeah, I think it's another one that I think as time plays out, and I'm just speculating, I think they drift more east than they do anything else.
But what about the current freak out? What do you make of that? I mean, with the tax, like I saw people freaking out about it on Twitter. I was like, okay, I'm talking to Mike soon. Let me just ignore that for now and get his view first, and then see what happens after that. What do you make of the current situation
Yeah,
with
I
the taxes and
I,
everything?
I think it's just another example of that. I don't think they can produce as much as people think they can, or turn the
Mm,
spigots on like people think they can. It's been a series of one-offs. 20, it was value over volume, right? It was COVID. Then it was sulfuric acid. We can't get it, right? And everyone's worried, oh, they're going to turn the spigots on. They're going to turn the spigots on. They turned the spigots on early on in that life in the early 2000s and mid 2000s. Remember, I said they were going from 9 million, they went to 19, or they were 21. They were supposed to. They went to 56, right? They were unleashing uranium onto the market that they hadn't originally planned. No one was planning for it. Um, so sometimes your best days are behind you, and so since 2017, like I said, it's always all of a sudden this Eastern Bloc country, former Eastern Bloc country, decided to get value over volume. They're the only ones out in that part of the world that decided to do that. Okay, it coincided with them going public, so they do that, and then right, and then 2 years later, COVID comes, then they can't produce, and then all of a sudden that the Russian war comes, they can't get the sulfuric acid, and then, oh, they could get it, but they didn't want to pay the price for it, and there was also an MET tax thrown in there along the way, and now this other MET tax now that disincentivizes production. So a series of things that have disincentivized production, and you're less than where you were several years ago. So um, I, I I don't think um, I don't think they're an immediate turn the spigots on threat at all. Um, I think that they're geopolitically undergoing a lot of they're under the company itself is under pressure. They've had four management teams change over, right? They're a revolving door of management teams. Many come in without experience in uranium. Um, right? It's an exceptionally cheap stock. So from an equity standpoint, it depends what one's risk appetite is. I'm not going to opine on that. Um, are they a force to be reckoned with in the industry? Absolutely. But I think their allegiances are shifting. I just observationally, I would say, and um, that it's that I wouldn't want to be a Western utility, and they've always delivered. They're good partners, but I think that sometimes things are bigger than them.
mm,
And so I think that it wouldn't surprise me that you see them being less of a participant in the West and more in the East.
mm.
Um, but I am very. We do pay a lot of attention to it.
Yeah. Well, you have to, again, as I said, it is a tricky jurisdiction, hard to understand, far from home.
Yep.
But you kind of have to pay attention to it. And it is all price dependent, I suppose, in the end, which makes me think about something you said earlier, which was you talking about getting a better understanding of how the sausage is made when it comes down to price reports. Um, which, funnily enough, you said you don't quite agree with it, to put it mildly. But what then is the real price of uranium? Like it sounds like a shallow question, but I found it to be more difficult to answer than what I had expected. What's the price
So
of uranium
if
now?
the price of uranium depends on spot market. Again, it's a very small market, right? So it is mid 80s probably.
Hmm.
Could be a little bit higher, Probably a little bit lower, maybe on any given day, right? Are there transactions that are conducted that are not reported all the time? Is that normal? Yeah, that can happen. Um, but the contract price, right? So what is the contract price? It is a base escalated price. And so when it's a buyer's market, they want certainty. They want a fixed price that's escalated over a period of time. That's base escalated. And so it will start 3 years from today. We'll escalate it at whatever 2-3% a year. And that's how it's reported. In a seller's market like today, the vast majority of contracts are being signed with market related mechanisms. And that's the seller saying, hey, we're in control here. And the buyer's acknowledging that by saying, okay. And they're saying, we want floors. We want a floor. Pick it up. The base price is $79 reported. We want a floor at 75, and we want a ceiling. And then the utility will say, well, we want a ceiling. Okay, well, maybe they'll settle in at 115, 120, something like that, right? So again, risk reward. So if I'm looking at it's market related at the time of delivery, right? So what's the price at the time of delivery? So make it up. It's 5 years from now, 6 years from now. It's coming in. What's that price with a floor here and a ceiling there? So that means if the price is being reported at $79 long-term price, that's base escalated, but that's a different regime. That was under a different market environment. What the price reporters do not report is the price that is prevalent in the market, which is the market related. They don't show on their monthly runs, they show the term price. All that is base escalated, and there are very few of those taking place. What they do show, or there's always an offer for that, but the deals are being done with the bulk of the sales at the market related. And so had they showed that, what you would see as an investor or you would see, oh wow, look at that. The market related price is $4 or $5 or something like that below today's term price, but the upside might be $30, $35, $40. That's unbelievable asymmetry, right? You've got all this upside potential and very little downside potential. That's where the market's headed and is at and heading more towards that. It would behoove all participants, including price reporters, to reflect what the market conditions are. You can't say, well, it's as they do, or at least one does that I know of. Well, it's always been done that way. That's kind of the way it's done. Well, I don't care. That's the way it's been done. You're not reflecting. Like, yeah, I get it. There are still people offering on it, but most of it's market related. Report it. Tell people we're seeing in the market. We know these deals were signed. $75 floor, 115, 10, $20 ceiling. Tell the market. Don't pretend it doesn't exist, because it does. That's how the market's transacting. And that shit happens all the time. And it's bullshit, right? So but you got to know that. And so where's conviction come from? Yeah, well, that's where it comes from. Right. And so I mean, I could sit here and do hours on forecasting and price reporting, but we've done that before, as I'm sure you've seen, and I'm not going to do that. I'll take the high road.
I could see you getting fired up, and it is
It does, because
I,
it
I like seeing it in
affects
real time.
it affects how people think. It
Yeah.
affects it affects it. And this industry, you also have to understand, is an old boy network. It is steeped in that. They hate outsiders. They hate investors. I stood up there in 2018 in Boston at the NEI. I went to the NEI and said, Nuclear Energy Institute, largest trade body in the world that represents a specific group here. And nuclear, they represent utilities, right? They lobby and I went and I said, you don't know me from Adam, but think the math is wrong here. I don't think the supply demand work makes sense. And they're like, who are you? And luckily there was a person there that I kept knocking on the door and would give me an audience. And finally, after laying out all the supply demand on PowerPoints and doing presentations for them, said, come speak to our group. That this makes sense. We understand this. And I did. And I went to Boston at their annual meeting, and I stood up there and I said, hi, you guys have done a wonderful job, to fuel buyers, a whole room, a packed room full. Did a wonderful job. You don't mean me. I'm a finance guy. I'm an investor. I've committed capital to the space. I have a different view than what consensus is. I'd just like to share with you. But again, you guys have done a wonderful job. you stayed out of the market, your contracts expired, you bought short-term contracts, you didn't do other things. Kudos. Let me share with you why I think you might want to consider buying at these lower prices versus not, versus waiting. And I again, I was a generalist investor for many years, and I've met always with people who buy stuff for a living, and they were always very accommodating and welcoming. And how can we talk? You might have a different view. That's not this group.
Mm.
This cohort is unbelievable. This cohort, I was met with, you have no idea what you're talking about. You're not a nuclear engineer. You don't know anything about uranium. There's always uranium available. Go home, bad Wall Street guy. One of the industry journalists, as I was coming off the stage, came up to me and said, "How dare you?" I said, "What? Who are you?" She said, "How dare you talk to these good, hard, honest, working people and tell them they don't know what they're talking about? You're a Wall Street bad guy," literally. And Tim Chilleri, who works for me, was with me. And we said, what are you talking? Like, who are you? I won't say her name. And I said, well, first of all, like, what does a Wall Street person mean? I don't even know what you're talking about. Um, and they're good, hardworking Americans. I think she did. I said, hey, guess what? So am I. Now, do you have 5 minutes? And if you have 5 minutes, let's go into this little enclave, and I'll open up our laptop and I'll show you the model we're talking about.
Mm.
And we did that. And after about 15 minutes, 10 minutes, whatever it was, uh, and it was all I could do not to tell her what I really thought, but I kept my tongue. And after that, she's like, I am so sorry. I thought you just stood up here and just told people that prices were going up because you're a bad Wall Street guy. I'm like, what are you talking about, a bad Wall Street guy? Do you know how many thousands of hours have gone into doing research on this? I've been at nuclear conferences all over the place, different countries. I've studied, I've talked to people, and I talked to this group of people. What are you talking about? That night or that afternoon, because the conference ended that day, nothing, crickets, nothing. I went to another conference. People were telling me, I would call on the phone, you talk to people. I'd meet them at other meetings. You have no idea what you're talking about. These are fuel buyers, but try to get meetings with them. They wanted no part of it. Nothing. And then you meet them at a bar, at a conference, you talk to them, you get to talk to them, and you realize, like, holy shit, these people, they don't want to hear a different voice. There's no greater source of conviction on the planet than that. Like, I'm showing you something that's research and informed, and you don't want to hear it. And on top of that, you're telling me I'm wrong. You haven't even spoken to me. Thank you all day long. I'll take that all day long. And you know what? We did it again in 2019. That same person at the NEI said, I see your point. You need to come talk to them again. And I did. And this time at the bar, they would come up to me and say, you have no idea what you're talking about. Now, the price of uranium had all started climbing. And they said, you have no idea what you're talking about. You
Mm.
don't know uranium. You are clueless. Prices aren't going higher. One guy that we'd never see higher prices. And wherever it was, I'm going to be paying 25 and 20 and 15 and 10. And one guy sent me an email saying, how you doing? You doing okay? Like antagonistically, because prices weren't going through the roof then. But that doesn't exist. You don't see that in almost any industry I've looked at. They're professionals that are buyers and sellers on both sides of the table, and you're talking and investors, and you're just learning and sharing your view. And I'm telling these people, you're doing a great job.
Mm.
You see them in it. You could be next to many of them, not all, but you can be many of next to them in an elevator at a conference. It happens all the time, and you'll say hello and you'll call them by name, and they won't even look at you. And you think, are you're serious, right? Like, you're joking. I've done nothing. I'm an outsider. I've laid out a very coherent argument. And oh, by the way, it's right. The prices tell me we're right.
Mm.
And you don't want to talk. God bless you. Good for you. And that's where conviction comes from. Stuff like that.
Mm.
So I don't know how I forgot how we got going on that, but yeah, it
You should have
it's
been
stuff
like
like that.
you should have been like Jared Vanett from The Big Short and take a quant with you and say like, look, this is my quant. Now you have to believe me.
I mean, we wrote a piece back in 2019 called "The Big Short," in parentheses, IGE, AGE. I
Okay.
wrote a piece to all of our people at our who are with us, investors, and it was talked about. It's the same scene. It's The Big Short in reverse. The ratings agencies are the forecasters. Um, and all of that, and how it's just backwards. And you can't, while it's happening, you can't believe it. And then you see them change it along the way. And the changing along the way, it's always driving looking in the rearview mirror.
Hmm.
So yeah, it's a really interesting sector to be in.
We've been on this for over 2 hours now, Mike, which I greatly appreciate. And I know you don't like talking about individual names, but there's three names that cross my desk that I'm thinking of potentially shorting. I'll just read them out. It says um, the Rangers, the Knicks, the Mets. I don't know what those are, but people are telling me I should short them.
So you should short the Rangers all day long because I'm an Islanders fan. So if you're from New York, there's the Islanders, the Rangers, and the Devils. And the Islanders are my pride and joy, and they were they won the four Stanley Cups in a row in the early '80s, and they've stunk since. And they've just gotten a little bit better. The Rangers are the franchise that's been around since the '20s. They last won the Stanley Cup in 1994, but before that, they had 1940. It was. So we, as grown men and adults, during hockey season, I act like a child uh, with my friends talking about hockey, giving each other a hard time.
It's funny. I
Uh,
just spoke to someone who went to a hockey game in Florida because I was in Florida last week for
yeah,
Rick Roll's thing, and I was talking to people like, "How's Florida?" And he said, "Oh, I just went to a hockey game," and I thought he was kidding, but apparently it's a real thing.
yeah. Hockey is just there's something special about
Good, Mike. This has been absolutely awesome. Thank you for being
it.
so generous with your time. I do want to try and
My
be at least
pleasure, man.
a little bit respectful of your time, so I'll let you go now. Is it? What am I forgetting to ask you? Probably a million things, but what do you want to? What do you want to close this off with?
No, look, it's I really enjoy. I enjoy watching your podcasts
Thank you.
that you do. I think you ask great questions. I love that you have a lot. You're humble. You're self-deprecating. Yeah, have a lot of humility, which we all know is not. You know all this stuff, and I like the way you have a nice way about you. We talked before. First time we had spoken was beforehand. Um, Look, I at the end of the day, I think structurally, I think there are deficits in the market. I think uranium pricing moves a lot higher. I think there's ebbs and flows. I think there are periods where you could express the view more bullish than others. Again, the plot within a bigger plot, right? But yeah, um, I you just got to. One thing I do think, Antonio, is I see. I don't know how people have so much to say about it, like all the time, and that's why I kind of checked out of Twitter because I don't want to. I don't want to. I told you beforehand. I don't want to debate. I don't want to debate people who have a platform on Twitter who talk about supply and demand, and I know they have no idea what they're talking about, and they may have agendas or not. But I'm not going to waste my time with that. And I can't I can't argue supply demand with someone who doesn't who has not done the work. And I'm not going to get into a pissing match, right? Um, and I don't talk about individual stocks because I don't know what any one person's view on anything is. I don't know what their risk tolerance is. I forget what there was a reason I started talking about that, about Twitter, about what I was talking about. No, I just lost my train of thought. But I think that, oh yeah, the frequency with which people have opinions on things, I don't have that many views on uranium. It's a very entrenched, not entrenched, well researched view that is ensconced, encased in supply demand work. It's not entrenched because I'm very flexible, but it's steeped in, that's the word I'm looking for. It's steeped in supply demand work that doesn't change that much, right? It doesn't. I see so many people looking for reasons why prices move up or down, why the equities are up or down, why the physical. Sometimes it just is, right? There's more buyers and sellers on certain days and weeks. Doesn't mean anything's changed. It doesn't mean you got to go hunting stuff down. These are long-lived assets. They take a long time to come online. There's a long-lived demand cycle. There are things happening. I just think if, for me, so I've kind of checked out from all that stuff, right? We just do our own supply demand work. We pay attention to what consensus is, um, and let it play out. At least that's how we think about things. I'm not saying we're right, but Anyway,
It,
that's all I know.
well, good for you. I think your wife would probably be happy that you're not spending all of your time on Twitter. My wife wouldn't know how that feels. So
Yeah.
Mike,
Well,
this has
she
been
would,
great.
she would, I'll tell you what, 5 years ago, she would say to me, she would say, "What are you all worked up for?" I said, "I just got to fight with someone." She's like, "Who? Like some random anonymous person that you don't even know? Like, what are you doing?" And I would say, "You're right. You're right. You're right. I know you're right." So anyway,
Thank you so much for doing this,
you
Mike. I
bet, man.
really, really
My,
appreciate it.
my
Um,
pleasure, Antonio. I enjoyed it.
all right, moving on. I'm going to Northern Europe this time, Norway specifically, where I'll be looking for many things at the same time. So rare earth elements as well as molybdenum, copper, and maybe even some gold. And I'll be hearing about them from Sven Golan, the CEO of Teako Minerals. The company is listed as T-Min, that would be TMIN on the CSE in Canada, where an average of about 50,000 shares trade each day with a 52-week high of 10 cents and a 52-week low of 3 cents. With a market cap of about $5 million and about 72 million shares outstanding, today this is a 7 cents stock. There are 1.1 million options and about 1 million warrants, leaving the number of fully diluted shares at close to 74 million. That would be management and significant shareholders, which together are a total of 12 parties, represent almost 2/3 of the company. That'd be 65% to be specific, with friends and family of management owning another 10% on top of all that, leaving only really about a quarter to 25% in the hands of retail. The last financial statement shows me $500,000 in current assets, most of which in cash and cash equivalent. And do note, though, that there is long-term debt on this balance sheet, specifically in the form of a convertible loan that the company signed about a year ago for total proceeds of $750,000 with a 5-year term and a 4% annually compounding interest, which is payable once per year. It is a convertible note, so it is payable in shares instead of cash as well. The full details, of course, can be found and should be read in the company's official financial statements under Note 7, that is. In terms of short-term or current liabilities, Teako holds a $200,000 account payable, about $50,000 of which are payable to related parties. That same financial statement, which is from April, by the way, also tells me that on average, over the last reported 3 months, Teako recorded about $75,000 a month in administrative expenses, mostly in the form of professional and management and consulting fees. As to exploration and evaluation, there was no cost incurred over that 3-month period, as that's when Teako was staking ground in Norway and kind of restructuring, if you will, the company. So there is no drilling yet with this company. So that is something we'll talk about later on. But it also means that it wouldn't be fair for me to make the administration to exploration ratio here as I typically do, because virtually all the money went to administration, at least over that last reported period. As always, though, I would like to remind listeners that this financial statement is nothing more than a snapshot in time. In this case, it is specifically at the end of April of this year, and it discusses the first 3 months of this fiscal year. The finances will, of course, have changed by the time you're watching this, partly because this is a non-revenue generating company, so they use the treasury to live off of it, and partly because they also have closed an oversubscribed financing since this report was published for close to $1 million. So please head over to the company's website as well, setterplus.ca, to look at all the numbers yourself and make sure you're getting the full picture. That all said, through the series of staking that I was telling you about earlier, Teako has secured a rather large, though non-continuous land package with lands literally all across Norway. There are a number of projects. There's 47 projects to be specific across 4 main districts, and I hope we'll touch upon some of them. I don't know how many hours we'll be talking about, so hopefully not all of them later on in the conversation. But I'm not doing an in-depth overview on all of them either, just to save your eardrums from severe irritation for having to listen to my voice for that long. But so just very briefly on the 3 main projects really that are the focus for the company here. The first of all, there are the twins, the twin sisters, if you will, the Lamunda and the Vena projects. They're almost contiguous, but technically not quite. They're technically 2 separate projects covering a rather extensive 900 square kilometers of land package when you count them together. This land package is in central Norway, which is also where the past producing Locken copper zinc mine is. So naturally, these 2 projects are also copper zinc targets, as well as some cobalt is assumed to be in there too. Right now, Teako is reviewing some data from the project, including some old, but also some very brand new geophysical data that was completed by the Norwegian government early this year. So they now have access to that with the idea of testing whether there are any major similarities or even a possible connection with that historic lock in mind that I was telling you about, which that was quite a big deal back in the day, by the way, before Norway found oil and gas. And so they're doing that mainly because some of the other geological data that Teako has access to, like the lithological package on both assets, is looking quite similar. So that's that. Those are the twins, and then all the way up in northern Norway, this is that's where the Vedas project is, which is it's one contiguous project, and it's big. It covers 800 square kilometers of land, making it Norway's largest copper cobalt project, which is also, by the way, located in a past producing mining district, which means that there is over 6 kilometers, 6,000 meters of historic drilling that the company has access to and can now keep on reviewing and come up with a thesis and hopefully potentially drill targets to test the potential for what they hope to be a large copper cobalt VMS style deposit. Again, there are 44 other projects that I could go over, but they're not the main focus here. And as you can see on the map, probably that I have on your screen right now, they're spread all across Norway, quite literally, which suggests that the company sees them as optionality plays, projects that can be used to close strategic option or sale deals or whatever other creative ways there are, and hopefully provide some funding for the main operations that Teako is going for here, similar to project generators, really, on which Teako is continuously and systematically doing some desktop work and again pursuing potential deals in the meantime, while also working the three main projects that I told you about. Suffice it to say, for a $5 million market cap company, there's plenty to talk about here. But before any of that, Sven, this is your first time on the barbecue, so we'll kick it off with the obligatory first question here. Why should I trust you with my money?
Yeah, thank you for the introduction, Antonio. That was a good description of Teako and the most recent activity that we have done here in Norway. Yeah, why trusting us with our money? First of all, we have invested our own money in the company. We would like to build the company together with our shareholders. That's a very important part. And then we have built the company on three pillars. One of them is our exploration strategy, which is obviously very focused on Norway. We see Norway waking up now big time. Norway has an amazing mining history, but since the oil discoveries in the 80s, there was literally nothing, and we can dig into this as well later. And we see the great potential in Norway in many ways because the miners have moved offshore, basically, to oil and gas, but the rocks have not moved. And we think there's a great potential in Norway, and the land has so much potential that we really are fully focused right now on this particular jurisdiction. We are building great relationships and great networks here, and we are very optimistic that Norway will play a very important role when it comes to the secure supply of minerals within Europe, maybe even globally. We will see. We will hopefully take part of that as well to discover the potential here on the mineral side. The second pillar is that we think innovation is needed in the exploration sector. I get tears in my eyes when I see the offshore oil and gas drillers in Norway that drill 50 holes and have one discovery. On mineral exploration onshore, I have heard many numbers, but they're circling around 1,000 holes per discovery, which is absolute incredible inefficient. And we think of new approaches, we think of new technologies, and we would like to offer Teako, and we have done that in the past as well, to startup companies that have great ideas, new ideas to disrupt exploration, how it's done, but also to bring in a new thinking and some free minds, new ideas to the sector. And this is what we have started already with a couple of companies, with particular local companies in more detail. And yeah, we will test their ideas. We will test software, hardware solutions. And if we are successful, this will help Teako moving forward, but this could also obviously help to make exploration as it is more efficient. And time and money saving is obviously something very important, especially in the current market. So this is hopefully something that we can follow up as well. And we have some nice plans to test new technologies later this year. And the third pillar we have built the company on is focused on collaborations and partnerships. We are very eager to break up this lone wolf behavior in the sector, my project, my secret. I think we can't be successful as Teako alone. We can't be successful as a company alone. We need partners along the way. So we are teaming up with other exploration companies, especially locally, obviously. We are teaming up with universities, have great collaborations here starting. This helps us a lot to be more efficient in our process in exploration as well, but also to bring outside knowledge to the company. This helps a lot also our other partners because we share data, we share knowledge and experience. And it's very important also to approach, for example, a laboratory as a group of companies. You get better quotes, you get better turnaround times. These are a few of big and minor things that can help you on the way in building up the business. And these three pillars, Norway, new innovation, and collaboration, this is what Teako is all about. And this is what we are trying to express also in our communication and our day-to-day activities. And if you like this, and if you think Norway has the potential, then you can join us on the road.
When figuring out whether I want to trust management with my money, one main thing that I look for is that skin in the game that you just mentioned. I'm looking for, are you eating your own cooking? So I'm happy you're saying that you are. I can also say that in the insider ownership, but insider ownership doesn't necessarily tell me how aligned we would be if I became a shareholder today, which is at 7 cents again. But instead, what I'm trying to understand here is how important is this investment to you specifically? Like, how much of your net worth have you dedicated to making this thing work?
Teako is by far my largest shareholding that I have privately. So
Okay.
it's the absolute focus. And every day as a management, as an employee of Teako, as part of this great journey, but also as a shareholder. And we have founded Teako 4 years ago with other European and North American investors, also based on many good and bad experiences that we have made in the sector. And one of the bad experiences is definitely related to the missing dedication of management teams to their projects and to the building of the company as a business model. So we are really, really dedicated from day one, and we have accepted a lot of share payments instead of cash in the past. And we have not sold one share. So we are still fully committed to that, and it will not change in the foreseeable future. We are just starting everything here, so it would be kind of stupid to now move away even. And also to mentioning our advisory board that we have now established in Norway, all of them have accepted share payments instead of cash because they see the potential here in Norway as well. And they are all experts in the business that are helping us developing our business. So it's great to see that we have very, very like-minded people here that are focusing on building the company.
What is this your only activity? I mean, as a CEO, are you doing anything else? Where you own private businesses, or are you on boards of other public companies or something like that?
Yeah, I was actually on board of a couple of other exploration stocks or companies, but now I have stepped down from all of them. I have no idea how others are able to invest all the time and effort that is needed to make a serious job as a board member on, I don't know, 10 companies. I was not able to do so. My focus is Teako, and I have stepped down from all other relations. I'm an advisor as well for our largest shareholder, a family office out of Austria. But other than that, again, no other director positions anymore, because Teako is just the full focus and needs a lot of time to build the company here locally.
Well, same. I make YouTube videos for a living, and sometimes I look at these CEOs that are CEOs of 7 companies at the same time. I have absolutely no idea how they do it because I'm struggling with my own thing already. But talking about your largest shareholder, or you said largest fund, but one of your largest shareholders that I noted here on your presentation is Frucht Express, which is seems to be a food company, better said. How come? What's the connection there? What's happening there?
Yeah, the investment comes originally from the family office that is attached to the company, but they are investing under the operative business. That's why this name pops up everywhere. And this is a company that invests a part of the stable cash flow from the food wholesale business into commodities, into infrastructure and energy-related businesses. There's this nice saying, right? Everything that exists in real life needs to be grown or needs to be mined. And they are following this sentence or the saying in their investment strategy. They were very active in the mining business a couple of years ago and then moved more and more into exploration and the more riskier parts. And this is a part of the family office investments right now.
So there's no strategic alignment necessarily. Like they're an investor, but there's no further connection but beyond that then.
Oh, they have founded Teako as it is right now, together with other partners. Without FX and with a couple of other big investors, Teako would not be there.
Okay.
So they have brought in a lot of their opinions and experience, and also their skills regarding building a business structure in setting up Teako as it is right now.
So is there similarities between your guys' management or anything else in there?
No, it's just me as a person, right? Because I'm still related
Yeah.
to the family office and advising them in other parts of their business as well when it makes sense. But it's a part-time job, so to speak. And the main job is the CEO of Teako, definitely.
Oh, okay. That's not your family that runs Vrucht
No,
Express.
no, no, no,
Okay.
no, no.
Unfortunately for you then.
Yeah, no, definitely not. Yeah.
Okay. Good. I'm glad that the corporate strategy thing is coming up, because that's as a topic, because that's part of what I want to get into today. Uh, and you specifically just trying to understand what exactly you're trying to do. Like, you gave me the 3 pillars at the beginning there, but you have, again, multiple projects, almost 50 projects that you have here. I'm looking to understand what the reasoning behind having that many at the same time is. Are you trying to have this hybrid model where you're an explorer and a project generator at the same time, or like where do you see the corporation as a whole going?
The thing is, when we looked into Norway years ago as a jurisdiction for Teako to expand the business on, we saw this on one side, this amazing history. So literally all exploration, at least on a large scale, and all mining stopped in the 80s with the low copper prices back then. And we had a complete standstill. And the last large-scale exploration was ironically done by an oil and gas company. It was called BP Minerals. And they have done this exploration work in Norway very systematically, very successfully for 4 years. And they have done it only because they got offshore licenses in exchange for their onshore activities from the Norwegian government. And when the licenses were granted, they literally stopped the work. And with BP Minerals leaving the country and a couple others as well, in the mid 80s, there was no other activity ongoing. A little bit here, a little bit there. We have the geological survey of Norway that is doing some work, but there was no large-scale exploration. Now we have many companies moving into this and that jurisdiction and focusing on brownfield projects, former mining districts, to play it safe. Maybe they see potential there. Others are more vocal regarding, district scale. We need to go bigger and then circle in on most interesting projects. What Teako has done now, based on this extreme potential that we see in Norway and this standstill, was that we have a country scale exploration effort. And we obviously will not keep all these projects. We will not keep the large area. That makes absolutely no sense for us. But we would like to keep the best projects, the best areas. So it was about quantity this year, and it will be about quality in the years to come. And which helps us obviously is the competition in Norway is just starting to grow as well. So we expected way more competition at the start of the year. It's a first come, first serve when it comes to staking in Norway. So we sat there at 0 o'clock midnight on January 1st on our laptops, and we started staking. So it was a different kind of fireworks on our side. And we started staking for 6 hours straight. And then a little breakfast.
Did you actually, like, is that a true story? Like, you act like on New Year's, you were actually on the laptop?
I was on this laptop. I'm sitting here right now, and I
Okay.
staked for 6 hours straight. Then a little breakfast, waking up the kids, walking the dogs, and then back on the laptop. And we never stopped staking for 3 weeks. And what we have expected was way more competition, because we got a lot of attention last year, especially in the field, when we had some couple of site visits from other companies. We knew about mining companies sneaking around. We knew about other exploration companies looking into Norway. So our expectation was we need to be fast, otherwise we will not be successful. The reality was, when the first Teako projects pop up on the ministry map 3 or 2 weeks after our staking effort at the January 1st, then the real competition started, because everyone saw, okay, Teako is grabbing land here and there. We need to be fast now. And the ministry told us that at January 2nd, when they entered the offices for the first time in the year, no one had the clue about Teako Minerals as a name. But at the end of the day, every of the 50 members of the ministry knew Teako Minerals as a name. And the same happened market-wide 2 or 3 weeks after that, when all the projects popped up everywhere. And we know for a fact now that many other companies have looked into several areas that we have staked now, and they have big plans about, yeah, we do this and that. We had secured these areas as a strategic step. So what we have done was using the staking system in Norway, less competition, a lot of free ground, and very cost effective as well in the first year to secure this ground. And now we are circled in on the most interesting areas. So what we are doing is really a countrywide prospecting and exploration effort to then keep the best projects, bring partners in, explore it for ourselves, or just sell the projects. And important to know is also, and then I will stop my monologue, the projects are projects for us. It's our, sorry, the projects are products for us. We would like to develop them, we can improve them, we are experts in exploration, and then we would like to sell them or bring in a partner. It's part of building the business. So we do whatever makes sense to grow the company within Norway and make the most out of this huge potential and leverage it.
It's the origins of the name of companies are always interesting to me. So I looked up Teako as what's the origins. I couldn't find a direct meaning of Teako as a whole, but there is a Japanese word that is Taiko, where it's the A first and then E, so Taeko, and it means mysterious child, and that would work too in some way. So
yeah, it's true. I learned that by Googling the name Teako, but it was not the origin of Teako. The origin of Teako is that it was first of all, it was a project name in British Columbia. It's still part of our portfolio there. But the name Teako is from the prospector's dog that was with him on every prospecting exploration season in British Columbia while he was discovering the projects that were the foundation of Teako. So this is where the Teako project as a project came up, and then was finally also the name of the company. And yeah, we have a couple of dog fanatics that call it that way in the company as well. It's just a coincidence in the end, but the name is really, yeah, originated in the name of the best friend of our prospector in British Columbia.
Yeah, I think it was originally, what I found is that originally it was a name of a family that moved to the US from Europe, early 1900s or something like that. So
okay,
you're mentioning BC though, that's interesting. Because I also wanted to ask you, like, what about BC then? I mean, everything that I see in the presentation online or whatever, all your communication is Norway, but up until a couple of months ago, or yeah, well, let's say a year ago, BC was, I mean, kind of a big thing for you. You were bullish on those projects as well. What has happened to those projects, and what happens to them in the future?
Yeah, so Norway happened to these projects and to our business strategy. The first idea was to build Teako on 3 jurisdictions: British Columbia, which is the foundation and the origin of the company, Norway and Finland, because we all saw advantages in these markets. We all had a great network and have a great network in these jurisdictions, and we had the plan to make the most out of it. So we planned the market entry into Norway and Finland for 2 years while we were still a private company, and then also while we were listing on the CSE via 1111 Exploration as a shell company. And they had a couple of other BC projects as well that they brought to the table. So our listing project was in BC and is still in BC, so that's a big relation, obviously. And we had a lot of exploration efforts in BC last year on our main properties there. And we changed the portfolio, we optimized a little bit. At the same time, the story in Norway grew bigger and bigger. And we saw with all our site visits, with all our talks here locally, we saw that Norway had a way better potential and is way more effective to explore for us as a growing and young company. And we saw way more leverage in what we are doing. And we had this big dream of doing a countrywide prospecting and really securing the most prospective land here in Norway. And this is not possible in British Columbia, at least as far as I'm aware of. It's a very mature market. It's not possible in Finland as well. It's tough to find a square meter in Finland that is not already owned by a mining or exploration company. But Norway was from day one like the Wild West of Europe in a very positive way. So we could settle everywhere. We see everywhere potential. Everywhere is the potential for the most exciting thing in our industry, a greenfield discovery. And this is also what motivates us day to day here. And this all has influenced in a big way our decision to move step by step away from these 3 jurisdiction strategy to a 1 jurisdiction strategy. And here we are now after the successful staking. There is no second question more in the team about jurisdictions. We are focused on Norway. We have still our listing project in British Columbia. It's still in good standing. We have still a valid drill permit on it as well. But right now, obviously, we have our hands full in Norway for good reasons.
So what do you do with that project? Are you looking for a buyer? Do you want to option it out, or are you just going to sit on it? What do you want to do with it?
Yeah, we are looking actively for a buyer or a partner to develop these projects further.
Okay. And that could be, what would you be looking like if I came to you and said, Sven, I want to have my own company in BC, which I don't. But if I did, what would you want from me?
Yeah, what we want obviously is some kind of a good partnership to develop the projects forward. Our Lero Moose project is, as said, still in good standing. It has a drill permit on it, a brand new 43101 report. So it's a brilliant listing project for a company. And we need to trust you, obviously, in your exploration efforts. We would like to see development on these projects when we stay as a co-owner or part owner. Otherwise, we are also open for an outright sale. So it really depends on the options that are on the table right now. But we are definitely looking for some kind of partner and to make the most out of these projects as well, to have a part financing of our activities in Europe.
Well, that's exactly more specifically what I was asking about. Like, if you're looking for a part or like a complete sale, what would that mean? Like, what does a project in BC like that go up for? How much money do you hope you can get for it?
Where we are looking for several 100,000 Canadian for the
Okay.
portfolio. Yeah.
Yeah, fair. How do you know that? Like, how do you choose which project to keep, which to proceed with, and which to sort of put on the back burner? With BC, it's kind of clear because you want to focus on Norway. I understand that corporate strategy there of yours. But when it comes down to Norway, it's kind of the same thing. Like your goal, typically the goal of an explorer is to go there and kill projects, right? Find out which projects are not worth anything so that you know what to continue with. But to kill 47 projects, you're going to need millions, tens of millions, dozens of millions of dollars, right? So how do you do that? How do you determine the value of something that's not being drilled, and how do you know what to keep?
Yeah, so the first part I will explain that. The second part then can come from Freddie. The first part is we have a lot of public data available in Norway. We have a lot of old reports, 100 years old, 50 years old, some of them just a couple years old. So the database is already there. And it still amazes us that there's so few competition going on based on all these data that we see there. So the potential is there, as said. At the same time, we have done some specific steps. We have the core check here in central Norway from the NGU. There are 800,000 meters of drill core there. What we have done last year, especially in December, we went there and used XRF and GEDA automatic XRF scanners to scan old drill core. For example, we have looked at drill core from northern Norway, and it was from the 50s, from the 60s in Norway. So very, very old drill core. And these boxes, they were old wooden boxes. They looked like these boxes for rifles from the Second World War. Actually, I think it was from the Second World War. And we were not even able to open these boxes and close these boxes. We had to break them up. And we were definitely the first company since the 50s and 60s that have looked into these drill cores. What have they done in the 50s and 60s in Norway there? They have looked for copper and zinc. What have we done? We have not looked for copper and zinc in December. We have scanned the drill core for other metals like cobalt, for example, for the modern metals, so to speak, these battery metals as well. And what we have seen there in these old drill core has also highly influenced our staking efforts. So we already knew a couple of projects where it's an old copper mine here and there, but we knew there is potential for more. And we are obviously now working a lot on confirming this potential. This is a major part. And the second thing is, besides the database, besides these amazing drill core archive that we have in Norway, is our field crew and our field work, where Freddie is the leader of. And we have a very quick approach to scan the project, to scan the areas now, also including our XRFs, but Freddie can explain that better than I do.
Yeah, so what we're doing is early stage exploration and testing what we've developed in our desk-based research. So as Sven's mentioned, there's been a lot of data available and we've reviewed an awful lot of data. So now what we're doing is we're sending teams of geologists into the field to test this with mapping, identification of these known mineral occurrences to give us conclusions and ideas from our initial interpretations to see if it's worth hanging on to these projects or not. So a very quick style of exploration but so far it's working quite well. We are identifying some very interesting things on a lot of these projects, and it is sort of aiding our thoughts of the potential of the areas. Yeah.
Okay. What specifically are you then looking for when you say, okay, this we're going to keep again? Because and all of this in the context of a small company where the bottleneck is capital, of course, finding decent ways to finance decent exploration, basically, with not too much of dilution. So what exactly are you looking for? Are you looking for high grade? Are you looking for size potential? Are you looking for strategic partners in the surrounding? What exactly are you looking for in those projects?
Yeah, so it actually comes to a number of factors you've just mentioned there. So a lot of the work we are doing our in-house analysis. We use our own XRF to give ourselves the data we want, and then we'll make an internal decision whether to keep or drop relevant projects. In addition to this, we are also always looking for partners that can provide investment and any real help really to the company to help bring these projects online, develop them more, and aid us with more detailed exploration work. Yeah.
It's very important to mention the potential partners here. I mean, we have already agreed on joint venture, for example, with the Coring company regarding 7 projects in northern Norway. And the first half of this year was really focused on building the project portfolio, securing this ground, and starting the field work. We have teamed up, for example, with the job centers locally, brought in people that helping our geos in the field that leverages obviously the whole efforts there for rock sampling, for soil sampling. We have also now teamed up with several universities. The students are joining us now in the summer months. That's a workforce in the field that we can obviously, that we need there definitely for this large ground. And then the second half of this year will be really, really focused to bring in more partners, to bring in more financing opportunities, to project sales, because of potential joint ventures or collaborations with other companies. And our, let's call it, shocking market entry for many in Norway has opened up a lot of doors and had made Teako in a very positive way a name in the sector in Scandinavia. So we are in talks with a lot of potential partners to make that happen. And we need obviously the financing side. We need obviously the geos in the field. And that was part of the decision to hire full-time geos to be really dedicated to the work that we are doing here. It's all about speed right now, but also all about finding the quality prospects and projects that we need for the next years.
It kind of sounds like there's 2 things at the same time. Like you need to do that work, of course, but at the same time, you also have to have a B2B strategy, if you will, where you go and like, how do you reach these potential parties? Like if you want to get a mid-tier or even a large company, a large diversified miner into one of your projects, how do you do that? What's the strategy for getting some of these contacts done?
First of all, we have built the company in a 2-way system, right? So we have a geo team in the field. They are fully focused on geo work. And we have a management team that is fully focused on management work. And we are leveraging our network here, especially in Scandinavia, to make contacts left and right. In some cases, we don't even need to do the marketing and the communication. For example, the market entry from BHP, where they enter big time now via Kingrose, Finland and Norway, has woken up a lot of more interest. And actually the companies are approaching right now the Norwegian explorers for projects and not the other way around. That's at least our impression for now. What we need to do now, obviously, we need to execute on these potential deals. There can be a lot of talks in the run-up of this, but we need to seal the deal here on many cases, and then we can make it happen, that we secure a lot of projects and build these quality projects together with partners. But mainly focused on network, mainly focused on communication. We are also trying to go a different route, not just the mining companies, the typical ones, so to speak, but also to approaching the local municipalities, to approaching more local companies that are interested in exploration and mining, that are even active in exploration and mining right now, maybe not well known for the international community, but very well connected within Norway. And this is a great door opener to potential deals, because these are also family offices. These are also established businesses within Norway. And the mood is changing here as well, right? Everything was focused on oil and gas and fishery, and now mining gains more traction. And this also means that more Norwegian and local investors are interested in mining and exploration. And this is something that we leverage as well. We had a lot of support from Scandinavia in our last financings. That was on the investor level, but we also see on the B2B level a lot more traction right now. And this even includes the municipalities who are interested to take part in this development.
I do want to talk about the environmental regulations and stuff like that later on as well, potentially, because my impression of Norway is that it comes with strong regulations, basically. So I do want to touch upon that. But to go back to your networking thing that you said there, like you're expanding your network, you're looking for potential relationships there. How does that look like specifically? And also, what I'm asking multiple times for this is because, as you mentioned, Norway is kind of a new jurisdiction. Well, it's an old, but a renewed jurisdiction for metals and mining. So what do you I mean? Do you go on LinkedIn and you call a bunch of people, or do you go to conferences? What do you do?
Yeah, you need to do the whole range, right? It's a lot of traveling and one-to-one talks involved within Scandinavia or in the wider European area, so to speak. It's not the conferences that we are going to, but we connect a lot on social media. It's an amazing pool of potential contacts and networks there. And it's also the network within the network, right? When we talk to one company in Norway, we get relations to two other companies in Scandinavia. And this is really an exponential growth right now. It's a lot of networking, a lot of traveling involved for all of us. And when we start the field work, it already starts with the networking locally. When we approach the municipalities, when we approach potential investors locally, we get connected to companies locally. I don't think we will be successful when we only focus on the big mining companies. They are not moving super fast, and especially not in new jurisdictions. We need to rely also on smaller partners that are maybe even more supportive of our business in the long term. And this is what we do. And this is only possible if you visit them, if you talk to them, and if you also be available in the country. So a lot of our team members are active within Scandinavia and even living there. That's an absolute important part of it. I can't talk to everyone via Zoom from, I don't know, Canada, Australia, whatever. We need to be here locally and connect locally.
You live in Norway too, right?
Yes, exactly.
Okay, good. And then part of that has actually brought you to one of the friends of Resource Talks, this channel, Mr. Eric Roth of Capella Minerals. How's that going? I mean, I know the deal has been a little back and forward. Like, how should I put it? I mean, how's that going? How's the deal going? When do you see it closing and all these things?
Which kind of deal are you referring to?
Well, I believe you had something going with Capella a while back. I haven't looked into it in a long time.
Yeah. We had partnered up on the Vadas project, actually, that you mentioned at the start of the conversation. So it was first a 50-50 joint venture, and now we have bought it completely from Capella and developing it alone. But obviously, there's a very close connection, not only because Eric and I have a multi-year connection and relationship. It's also because Eric is part of the board of Teako and is a very active member in the Norwegian exploration community. And yeah, it's a great partner as a company, but also Eric as a person, no doubt about that.
When I'm asking how that's going is how's that relationship going, and are there larger synergies there? Because you talked about maybe focusing on multiple jurisdictions. You said something about Finland. All these things remind me of Capella. Capella is struggling right now too. I mean, they're at a cent. Is what their market cap is, what, 2.5 million or something like that. Shares that are at a cent. I mean, it's at time as these that you can make potentially beneficial agreements for both sides. So is there a potential for you to move forward with them on a larger scale?
I think there's always potential for more steps, especially when you are so close. At the same time, we need to look also on the Teako side. We have a lot to do with the Teako project alone, but we value this relationship with Capella, and we are working a lot together. Our geos are working together. We are exchanging experiences. We are sharing all what we can on the local level. And when we approach the municipalities, we do this also with a good word for the partner company here. And we have a great relationship with many Norwegian exploration companies right now. So the connections are growing, and Capella is definitely a special one because of this long-term relationship. And again, as a management team, we need to look into all opportunities that arise in this market. And yeah, there are possibilities, and we will follow these possibilities if it makes sense.
Well, so I appreciate the politically correct answer, and I know you have to give it that way, Sven. But what about just why not just a simple merger? I mean, a merger on whatever valuation that makes sense for both sides. Just merge the two companies, lower G&A, more opportunities, something along those lines. Why not something simple as that?
It could be an option for the future. But again, we need to we have also plans for Teako to bring Teako forward with as we are right now. It could be a distraction. It could be a way forward. I mean, we are also looking in maybe listing the company on a different marketplace to open it up to more liquidity, to more investors. A potential merger could open up this potential as well to uplist to a different exchange. This is everything, all part of what we are looking as a management team, right? But if it happens, it belongs in a news release, and then you will see it.
That's a good point. I understand what you're telling me. I'll stop pushing now. Why not the Norwegian Stock Exchange in the meantime, or is that an option as well? Because I had it on here in my list of questions to ask you as well. I mean, there's not many. There's just really a handful of mining companies, I think. So why not list there?
Yeah, we are in contact with the exchange in Oslo, and we are also considering this. It needs to be the right time, and it also needs to be considered that we need to spend money for the listing. And right now, the money is better spent on our project portfolio. So this is why we're delaying this a bit. But there will be a time very soon where we need to make a decision because the CSE is not available for all of our investors in Europe. And we need to open up for more European investors. We would like to have more local investors and also more liquidity in the stock and the potential, secondary listing, a potential uplisting. Everything is right now considered from the management.
Right. Do you have an idea of what that costs? I know what the costs are on the TSXV and stuff like that. It's not always too much, but what would it cost you to list in Norway?
Yeah, so the basic package without any complicated things around 100,000 Canadian.
Okay. So it's a little bit more expensive than the CSE.
Than the CSE, yes, but way cheaper than the venture, for example.
True. Yeah, that is true. Let's talk about, you said multiple times, you mentioned you want to move forward with what you have right now. Part of that strategy, as we mentioned, is the 3 projects that you're moving on, that you're currently doing. You currently have boots on the ground, basically. You have a team walking the bush or the rocks or whatever it is in Norway, the vegetation. So what's happening? What are you going to be doing specifically this year? What's the focus? What's the main unanswered question, if you will?
Yeah, Freddie, would you like to tell about the field programs?
Yeah, I'll have a crack at that one. So to start with, we had our first team in the field on the 3rd of May, I believe. Okay. And we started on some of our southern programs. So we've worked doing field mapping, prospecting sampling and soil sampling for the past couple of months. We've worked our way north from our southern licenses up to Lamunda and Venna, which are our VMS main sort of lock and style focused deposits or projects that we're hoping to find the deposit. We've now got 2 teams set up there where we're doing both prospecting, mapping, and we're also just about to start some soil samplings. I've got meetings with the team this afternoon to work out the next plan going forward. And there are 4 Teako geologists on site currently, and we have 3 of our, Sven mentioned, we hired local staff in the south, which all had geology degrees, and they've come and assisted us with our soil sampling. And now we've trained them up, and they're well suited to it. We're continuing working with them in the north and in our central area, where they'll continue with our soils as we go forward. So up to now, we are testing our theories that we've worked out through desk research, looking at the areas and seeing what more potential we have for more detailed exploration work. So very early stage for us yet, but quite exciting times ahead.
How long is that program going to take you? Is it seasonal?
So we're hoping to get the soils and the mapping done throughout the summer. Yes, we tend to have that as our seasonal exploration work, and then we will do what we can over the winter with potential geophysics work, potential drilling work, etc., depending on how our summer progresses.
Right. Okay. How much money are you budgeting for all that work?
Yeah, we have hired our own field crew and our own geologist, and this is around 60,000 Canadian per month for the field crew and the students and the geologists. And then we have obviously some additional costs regarding how much sampling we are doing, how much the laboratory is involved. But we try to keep the cost low with our own EXRF equipment and scan every sample that we take before we send something to the lab, right? So we know already about potential anomalies before we even send something to the lab for confirmation. And this speeds up the whole process. But you can calculate around 100,000 Canadian per month for a full field crew and a full field activity ongoing right now in central Norway.
So about $500,000 to finish that whole thing. Will that sound reasonable?
No, it will be less than that because we are planning for 2 to 3 months right now, very intense field work with a large crew actually, out of a couple of students as well as said. And we are also looking for partnering up with a drone company in Norway that will speed up the whole process of scanning the large area. So it will be a combination of it, right? We are moving forward month by month and step by step. And the main focus is on central Norway, is copper, cobalt, and zinc. We are looking for a second and maybe several of them Løkken deposits. And as you mentioned, Løkken was a very, very large mine. And when we find something like this or indications for this, we are also planning drill targeting and later on this year a test program together with the coring company.
Okay. And as I was mentioning at the beginning, based on your last filed quarterly report, that was $75,000 a month on G&A. Are you planning to keep it there? Can it get lower? Can it get higher? What are you thinking?
So our G&A, which relates to the management, is 37,000 Canadian.
Okay.
And the rest is invested in our field crew. And we have made the decision to not hire contractors. I know that some companies are telling you a low G&A is nice over the year, but then they are hiring contractors for 4 or 5 times the rates that we pay for our field crews. And it was very important for us not to save money on this side, but also to have dedicated geos in the field and a dedicated field crew in the field. This is why we have hired local field crew helpers, but also we have bought in 4 full-time geos for Teako, which means a higher G&A, if you call that G&A when you spend for the geo work money. But at the same time, the geos will move to Norway now and are fully dedicated to the project and the work we are doing here. And we need these dedicated people. Otherwise, we are not effective enough to move these projects forward.
So essentially, 37 is your management. Then you say about 100 on, so 140 grand a month is what you're spending on average over the summer.
So 100 would be the full field program, right? With everything included. And that's the monthly cost that we have. Yeah.
Okay, good. You just raised about $1 million. There's about $500,000 before that in treasury. So what I'm assuming, no capital raises anymore this year, or like, how do you look at that?
Oh, we might go back to the market depending on the deal flow and depending on the expansion of the projects. I mean, if we are more successful with our field program, we will obviously expand the field program locally. When we just confirm our targets and can circle in on the most interesting projects, we move on to the next district. But let's say we are moving forward fast now in central Norway and we find potential drill targets, then we will focus on this and develop them more intensively. And then we need more money in the field, right, and spend on developing the project. So that's a very important step. And we are looking obviously to close some deals on the project side to then refinance the company again. So it will be a mix, and it could be both during the year now.
Right. Okay. So you have the money to keep doing that. You have the idea, the plan, you have the people to do it. What is left there? Community environmental. Is everyone happy? People, fishes, birds, whatever other animals you might have on the project. Everyone happy with you doing work there?
Yeah, I mean, it's a process, right? A lot of communication. We need to do a lot of networking. What we see on a local level is really an amazing support, especially from the municipalities, especially from even landowners. We were invited from landowners to look on their ground if there's some minerals there. The media is very supportive in Norway right now. There's real awakening going up, so to speak, that is supported also by the Norwegian government with a new Mineral Act, with a new policy. The DMF, the ministry that is responsible for the permitting process and for the licenses, is very, very supportive. We have our own advisor now with the ministry because we are so large and so important in exploration in Norway. This all helps us a lot, but also we need to talk a lot to people, right? We have started the Sami relations. We were visiting the Finnmark. We were visiting other areas in northern Norway. And it depends really on where you are in Norway, how fast you can move forward. Sometimes more effort is needed, and sometimes you are even invited to areas to look there and do some exploration activities. And a lot of explaining to do as well. I mean, we are an exploration company and we need to explain what exploration is about. We will not go there and dig a deep hole and start mining. We need to define, obviously, the targets. And this is something that we do as well with universities, with the locals, with schools, to really have spread the word about what we are doing. And others are on our side here, the other exploration companies. It's a great collaboration within the sector in Norway.
Okay. So what does that mean for you specifically before you can finish this program? Do you need any specific sign off or anything, or can you just go ahead and do all that, but keep it continuously going?
You need to notify the municipalities, the locals, and the DMF about your work. The DMF also wants to know what you have done, if it was successful or not afterwards. But other than that, for our current field programs, we don't need any special permit. There's a lot of rights attached to an exploration license in Norway. So this is very, very helpful as well. And when we go to drilling, obviously, we need to apply officially for a permit. This takes generally 6 to 8 weeks. What we see from our competitors here, it's a fairly fast process as well and well organized.
And how much of a risk is that? And that actually might lead us into a conversation that might need its own podcast, which would be Norway as a jurisdiction. But how reliable is that process? And can there be, again, people coming to throw soup at you while you're applying for that permit or something that would hold you back from actually getting it?
Yeah, I mean, Canadians might disagree, but Norway is a huge country, at least for Europeans. And it highly depends on where you are in Norway. And it's no secret that the more north you go, the tougher it gets from potential environmental restrictions or potential SAMI regulations that could at least stop the process or slow the process down, or it needs more attention then. But so far, we as Teako, and we get the same feedback from other companies that are active here, we have not encountered any serious problems while talking to people. And I guess the communication is here so crucial. We got to know from others locally that they get calls from everywhere worldwide. They would like to build something in Norway and process something in Norway. But if you are there in person, I think it's a great door opener from day one.
Right.
But again, it highly depends on where you are in Norway. And you are right. That would be another hour to talk about that. But it's one of our most crucial things that we are doing right now. Why our geos are in the field. We are traveling the country to open these doors and make the life for our geos easier than when they come in.
Good. Well, Sven and Fred, I know that you guys have to run now. This has been a good overview. I have a bunch more questions, so I think we should do a follow-up one. I'd like to better understand the land package, the geology of the land package, and better understand the jurisdiction as well. So maybe we should do a follow-up interview to talk about this. But I am all out of questions for now. What am I forgetting to ask you, though, on the corporate side or strategy side? What do you think we should be talking about here?
Yeah, watch our news flow in the next couple of months. We are planning some nice steps and some nice progress for the company within Norway. We have prepared for that throughout the year. And if we are successful in the next weeks, you will see some nice news flow coming from us. And it's important for us to be transparent, right? So you will see it on social media in the news releases as well. And then you can follow the story in Norway. And Teako is obviously very dedicated here to this part of Europe.
That's Frederick Dunkhoff and Sven Golan of Teako Minerals. Gentlemen, thank you so much for investing your time with me.
Many thanks, Antonio.